Hello my dear students, my name is Prof.Abbasali. On behalf of JK Shah classes, I welcome you all for the discussion of RTP May 2024 Paper 1 Advanced Accounting. My dear students, the discussion is extremely important. Before going to the exam, you all must be cleared with something what type of question the institute will ask in the paper. Fine, because it is the very first attempt in the new syllabus. Fine, hence the discussion is very important. Now, paper 1 in advanced accounting, we are starting with part 1 multiple choice question based on case studies. Question number 1. My dear students, they have given one case study here. You can see the long case study here, and there are 3 questions attached to it. Question 1, question 2, question 3. Fine. Now, we will read the case study, but many things are not necessary while answering MCQ. Correct? So, your objective is just quickly go through the case study and then quickly go through the MCQ and then decide based on which accounting standard that particular MCQ they have asked. Fine. So, question number 1, RTS Limited, now onward we will say company, is engaged in the business of manufacturing of equipment or component. The company has a contract with Indian Railway for brake component which is structured such that, now such points are given, they are the agreement points. Fine. So, this particular company manufactures some component for the Indian Railway, and the agreement terms are the company's obligation is to deliver the component to the railway stockyard while the delivery terms are X work. Once the work is done, now it's your job, the railway department's job. The company is responsible for engaging a transporter for delivery. Okay, we will arrange the truck transportation and you can take your delivery. Railway sends an order for a defined quantity, 10 numbers, 20 numbers, this many components please manufacture for us. Third point, the company manufactures the required quantity and inform railway for carrying out the inspection. Very important. What we will do, my dear students, our job is very simple. We will manufacture and then we will inform, please come and inspect, that as per your rules, regulation, the requirement, these components we have prepared. Fine. Now it is good or bad, you just inspect it and thereafter you can take it. So this is very important. They informs railway for carrying out the inspection. Okay. Railway representative visits the company factory and inspect the component and mark. Now they will mark each component with the quality check sticker. Fine. As soon as they will put that sticker, our job is over. Now they themselves are confirming that the units are correct, good, without any defect. Correct. Fine. My job is over. So logically speaking, my duty is done when the inspection is done, and immediately I can book my revenue in the books of accounts. Goods once inspected by railway are marked with the hologram sticker to earmarked for delivery identification by customer. Who is the customer? Indian Railway. When they are delivered to the customer's location. Fine. Goods once inspected, once the inspection is done by them, they are marked with some hologram sticker for the delivery identification. It means you can understand, once the hologram sticker we put, they are ready for delivery. They are ready for delivery from our end. They are ready for delivery from our end. Fine. Immediately customer should take it. If we are still keeping in our godown, it means what? We are delaying because of buyer's request, that is Indian Railways request. Fine. I can book my revenue when I am ready for the delivery, but delay is happening because of customer's request. Then as per accounting standard number 9, risk and rewards are transferred when we are ready for the delivery. Fine. Once the hologram sticker is put, the company raises an invoice once it dispatches the goods. Okay, fine, no issues. The management of RTS is under discussion with the auditor of the company in respect of accounting of critical matter as regard its accounting with respect to subsequent event, that is event after reporting period. They have been checking as to which one of the following events after reporting period provides evidence of condition that existed on balance sheet date or the reporting date. This is irrelevant paragraph while answering the MCQs. These 4 points which they have given: nationalization, out of court settlement, right issues, strike by workforce, announcing a plan. Believe me, not related to any of the MCQ which they have asked. For us, important points are these 3. We will make the product, they will carry the inspection, quality check will happen, they will put the hologram. Now we are ready for the delivery. If there is delay because of buyer's request, then in that case our job is done. We are ready for the delivery, risk and rewards are transferred. Once the inspection is done, we should book the revenue. Fine. On this basis, my dear student, one question we can answer. Please check here, all of you, what it says. When should RTS recognize revenue as per accounting standard? Revenue as per ES 9, correct? Fine. So, when we can book the revenue, my dear students? When the inspection is done. Would your answer be different if inspection is normally known to lead to no quality rejection? No. My answer will still remain same, that once the inspection is done, we can book the revenue. Check your option A. Revenue should be recognized on dispatch of the component. No. Can I say risk and rewards are transferred when the inspection is done? The hologram sticker the railway department put on that particular component. Fine. So, first option is not valid. Second, revenue should be recognized on completion of inspection of the component. The answer is yes, but the second answer, the assessment would not change even in case where inspection is normally known to lead to no quality check. Okay, the assessment would not change, even this answer is yes. So, logically option B is correct. Can I say once the inspection is done, we can book the revenue? And second, my assessment would not change even every time there is no problem in the product. All of you done? We will still read the C point. Revenue should be recognized on dispatch of component. No. Inspection, after inspection we can book. Here, revenue should be recognized on delivery of component. No. Fine. My dear students, so my correct answer is option B. When the inspection is done, the risk and rewards are transferred to the Indian Railway, hence we can book the income. The assessment would not change even in case where inspection is normally known to lead to no quality rejections. If you check here, option B is correct. Fine. My dear students, now in the same case study, we will study this particular paragraph. Check here. This paragraph deals with accounting standard number 12, government grant. The company has received grant 8 crore from government for setting up factory in backward area. Can I say this is promoter's contribution? Out of this grant, the company distributed 2 crore as dividend. Oh my God, you cannot distribute dividend out of the grant received as promoter's contribution. Fine, because it will be transferred to capital reserve, my dear students. You cannot distribute dividend. The company also received land free of cost from the state government. Now tell me, as per accounting standard 12, any asset received free of cost should be recorded at nominal value as per the standard. Fine, but it has not recorded this at all in the books as no money has been spent. It's wrong. Now here two things are there. One is promoter contribution, you cannot distribute dividend out of it, and second one is, my dear students, free of cost, it should be recorded at nominal value. Fine. Based on this, you can answer, my dear students, your MCQ number 3, which is based on ES 12. Please guide regarding the accounting treatment of both. Both means number 1 is promoter's contribution, another free of cost. Mentioned as per ES 12. Check. Number A, distribution of dividend out of grant is correct? No, it is incorrect. Distribution of dividend out of grant is incorrect? True. But second one, in the second case, not recording land is correct? False. Even this option is not valid. Distribution of dividend out of grant is correct, false, say 1. This third case is wrong. Last one, distribution of dividend is incorrect, true, you cannot distribute dividend out of capital reserve. In the second case, land should be recorded in the books of accounts at nominal value. The answer is true, so my option D is correct. You can check here. Third one, answer is D. My dear students, in the case study, now last paragraph, please check here. Valuation of closing stock they are asking, which is based on accounting standard number 2. RT as a subsidiary A Limited, which is evaluating its production process wherein normal waste is 5%. 5000 MT of input were put in process resulting in wastage of 300 MT. Now try and understand. 5000 MT, normal wastage is 5%, which comes to 250 metric ton, but my total loss is 300 metric ton. Out of this 250 metric ton is my normal loss, and my dear students, 50 metric ton is my abnormal loss. Clear? Fine. Read further. Cost per metric ton of input was 1000. Okay, so for 1 metric ton, 1000 rupees is the cost. The entire quantity of waste was on stock at the end of the financial year. Okay, so normal loss you will not find, but my dear students, abnormal loss. See here, the entire quantity of waste, total is 300 metric ton, was on stock at the end of financial year. Now try and understand, whenever there is normal loss, then we need to find revised cost per unit. You just tell me, my dear students, my total cost is how much? 5000 metric ton, and for 1 metric ton the cost is 1000, which comes to 50 lakhs my total cost. Divide by, now total units available after normal loss we find. So this is 5000 metric ton minus 5% is the normal loss. Fine. So this 50 lakhs divided by, please, 5000 minus 5%, which comes to 4750 metric ton. So 50 lakhs divided by 4750, which comes to 1052.63157894. The full amount on the calculator, my dear students. This is my revised cost per unit after normal loss. Fine. Now, if you confirm my closing stock would be 4750 metric ton, but in this you can confirm 50 metric ton is the abnormal loss. So logically speaking, the physical stock available with me is nothing but 4700 metric ton is the closing stock. Now this will be multiplied with the revised amount 1052.63157894. Fine. What they are asking in this particular question, please confirm. Point number 2, in respect of A Limited, state with reference to accounting standard what would be the value of inventory. Value of inventory you can understand 4700 metric ton after abnormal loss to be recorded in the books of accounts. So this should be multiplied with revised cost per metric ton. My dear students, please confirm here. This figure will be multiplied by 4700, which comes to here 49, just a minute, 49 lakh 47,368, 49 lakh 47,368, 49 lakh 47,368 is option D. So for the second one, the answer D is correct. Fine. My dear students, if you confirm, your question number 1 is over. Fine. Now general MCQ, question number 2. What it says, please check. This is simple one. Gyan Limited borrowed rupees 10 crore for construction of a plant at the rate of 10% per annum, okay, for the construction of plants. So, can I say this 10 crore is a specific borrowing, specific borrowings. The sum is based on accounting standard 16. Borrowing cost, interest paid annually 1 crore. Very simple, 10 crore into 10%, which comes to 1 crore. That much interest, borrowing cost we have to pay. The construction was being carried on, and out of the borrowings, 4 crore was temporarily placed in fixed deposit at the rate of 6%. So tell me, 4 crore into 6%, interest earned would be 24 lakhs. At the end, how much cost of borrowing Gyan Limited will capitalize? It's very simple. Total interest cost 1 crore. Total interest cost is how much? 1 crore. Total borrowing cost minus income earned from temporary investment, because my construction will start after a few months. So till that time I have invested some amount in the FD. Which amount I have invested? The borrowings amount I invested in FD. So from that, whatever income we will earn, that will be directly related to this particular cost. No, my dear students, the 24 lakh rupees which you have earned is directly related to this borrowing cost, and hence it should be subtracted from 1 crore 24 lakh temporary income. So net borrowing cost which will be debited is how much? 76 lakhs. Correct? My dear students, at the end, how much cost of borrowing Gyan Limited will capitalize? So in the asset we will add 76 lakhs borrowing cost and not 1 crore. So total borrowing cost 1 crore minus income from temporary investment, and that investment you have made out of the borrowings only, because that much amount I don't need at initial stage. After a few months I need. So till that time, for 1 month, 2 month time, we invested that particular amount. That is directly related income to this particular borrowing cost. Hence, that should be subtracted from the total borrowing cost. Net 76 lakhs will be added in the cost of asset, my dear students. Which option is correct then? Option C, interest paid less income on temporary investment 76 lakhs. Option C. For second, the answer C is correct. I hope this part is clear. Now, part 2, descriptive question, my dear students. Try and understand. Introduction to Accounting Standard. Okay, this chapter is there in your syllabus. First 3 chapters in module 1. Introduction to Accounting Standard, Chapter 2 Framework, Chapter 3 Applicability of Accounting Standard. Fine. See, this is your Chapter 1 of Module 1. This is your Chapter 2 of Module 1. This is your Chapter 3 of Module 1. So, how they have drafted the question, please try and understand. Question number 3 says what? What do you mean by carve out or ins in Ind AS? My dear students, question number 3. What is Ind AS, my dear students? For Ind AS, the full study we will do in final CA level. Fine. But what is Indian accounting standard? What is carve in, carve out? In India, we have followed IFRS. Correct? There are 2 techniques. Technique 1, technique 2. How we can follow IFRS in India? Technique 1 is adoption. Technique 1 is what, my dear students? Adoption. Technique 1 is what? Adoption. As it is, we follow. Technique 2 is, my dear students, conversions. We have followed in India conversions. Fine. What is conversions? We have not followed as it is IFRS. Now, in IFRS, we have added something that is known as what? Carve in. What we have added? The few things which are not there in international financial reporting standards, but we need in India, like additional disclosure requirements. Fine. So IFRS is saying disclose 2 things. In India, we need, along with the 2, disclose 3 more things. Okay, fair enough. So that is known as what? Carve in. So we have added few things, and a few things we have subtracted, we deleted. That is known as what? Carve out. Because the economic environment which is there while following IFRS, that we don't want in India, because Indian economic environment is different as compared to the international. Fine. So carve out, we deleted few things based on economic environment of India. We deleted few things. Fine. Now see, we have not followed as it is IFRS. We have added few things, additional disclosure requirement, that is known as carve in. We deleted few things because we don't want that economic environment situation which is there in IFRS, because Indian economic environment is different as compared to international. Hence, to match the Indian economic environment, we deleted few things. Fine, that is known as what? Carve out. Hence, we have followed conversions method. We added something, we deleted something, and hence it will become, my dear students, Indian accounting standards. Fine. So Ind AS is what? It is in line with international standards, but with few carve in and few carve out to match economic environment of India. Fine. My dear students, if you see the solution here, check question number 3. Certain changes have been made in Ind AS considering the economic environment of the country. Fine. Which is different as compared to economic environment presumed to be in existence by IFRS. Now, Indian economic environment is different as compared to what is presumed in IFRS. These differences are due to difference in economic condition prevailing in India. Economic condition prevailing in India. These differences which are in deviation to the accounting principle and practices stated in IFRS are commonly known as what? Carve out. We deleted those presumed things from the IFRS and we have added as per the economic environment of the India. Correct? Additional guidance given in Ind AS over and above what is given in IFRS, have already mentioned. IFRS stated 2 disclosures. We said please 3 more disclose. Correct? Is termed as what? Carve in. I hope this part is clear, my dear students. Okay. Now, next question number 4, which is based on framework for preparation and presentation of financial statement. Fine. Now, this sum is based on capital maintenance. This sum is based on capital maintenance. Capital maintenance. Try and understand what it says. Shiva started business on 1st April 2022 with 15 lakh represented by 80,000 units of 25 each. This 15 lakh is wrong, my dear students. If you confirm 80,000 into 25, it comes to 20 lakhs. So, that is mistake in the PDF, the institute PDF. Shiva started business on 1st April with 20 lakh represented by 80,000 units of 25 each. During the financial year ending on 31st March 2023, he sold the entire stock for 35 full. Entire 80,000 units sold at 35. It means, can I say per unit profit is equals to 10. Fine. In order to maintain capital intact, okay, capital intact, it means at beginning of the year, I had 20 lakh rupees in my hand. At the year end, in my pocket, there must be 20 lakh rupees only, because the question clearly says that capital should be intact. Calculate the maximum amount which can be withdrawn by Shiva in the year 22-23 if the financial capital is maintained at historical cost. So, my opening capital was 20 lakhs. At the end, closing capital must be 20 lakhs only, because it is maintained at historical cost. History, the opening capital was 20. So, closing must be 20 only. Now, tell me how much profit I can withdraw, my dear students, then. Profit I can withdraw. Profit which I can withdraw is equals to, try and understand, at the year end, the entire stock 80,000 we sold at 35. So, in my pocket total 28 lakh rupees you will find. Out of 28 lakh, keep aside 20 lakh rupees which is equal to historical capital amount 20 lakhs. Out of 28 lakhs, keep aside 20 lakhs which is the original capital amount. The remaining 8 lakh rupees you can withdraw. By that way, you can maintain your capital at historical cost. You can withdraw 8 lakh rupees. Fine. And directly even you can calculate 25 and 35. The difference is 10 into full entire stock sold, which is 80,000 unit. By that way, even you can get 8 lakh rupees. Fine. Check here answer fourth one. My closing equity, that is my closing capital, 80,000 into 35 per unit sold. So in my pocket total 28 lakh rupees you will find. My original capital is 20 lakhs. So possible withdrawal is 8 lakh rupees. Fine. All of you, the sum is very simple. Now next question is based on applicability of accounting standard. Question number 5. Question number 5. Try and understand, my dear students. In applicability, what they say, based upon criteria for rating of non-corporate entity. Acha, it is non-corporate entity. Categorize the following as level 1, level 2, level 3, level 4 entity for the purpose of compliance of accounting standards in India. My dear students, question number 5. Non-corporate entities. Non-corporate entities. Now there is level 1, level 2, level 3, level 4. Now you know in level 1, listed or in process of listing, bank, financial institution or insurance company, there is turnover limit, there is borrowing limit and holding and subsidiary of above. This you already know. Level 1 categorization. Now turnover is what? More than 250 crore and borrowing is more than 50 crore. Fine. Now in level 2, which is not a level 1, but we need to keep in mind turnover limit and borrowing limit. Level 3, again we need to keep in mind turnover and borrowing limit. And level 4, my dear students, which is not level 1, 2, 3, easily you can say turnover and borrowing is less than level 3's limit. Fine. Now here how to get turnover limit for 2, 3. So simply it should be divided by 5. Level 2 should be divided by 5. So level 1 turnover and borrowing, if you will divide by 5, you will get level 2 amount. 250 divided by 5, 50 crore. So it should be more than 50 crore, less than equal to 250 crore. Borrowing 50 crore in level 1 divide by 5, so more than 10 crore, less than equal to 50 crore. Now how you will get level 3's limit then? Level 2 divide by 5. So 50 divided by 5, more than 10 crore, less than equal to 50 crore. Borrowing 10 divided by 5, more than 2 crore, less than equal to 10 crore. Now finally level 4 is less than equal to 10 crore, less than equal to 2 crore. Fine. Now based on this, you have to answer the question here. Check. Rama Textile, whose turnover excluding other income exceeds turnover limit, they are asking, exceeds 10 crore but does not exceed 50 crore in immediately preceding accounting year. Exceeds 10 crore, does not exceed 50 crore. Come on. Exceeds 10 crore, more than 10 crore, does not exceed 50 crore. It means, can I say level 3 they are talking about? Level 3 they are talking about. Fine. My dear students, so tell me Rama Textile is level 3 entity then. Fine. Check here all of you. Level 3. Done. Second question they are asking, Star is having borrowings. Okay, now borrowing limit in excess of 2 crore but not in excess of 10 crore, my dear students. Please check here. More than 2 crore, less than equal to 10 crore. Again it is level 3. Yes, so Star is level 3. Check here. Level 3 entity it is. Fine. Next one, my dear students. Newman Industry is having borrowings including public deposit less than, now again borrowing limit they are asking, less than rupees 50 lakh at any time during immediately preceding accounting year. Children, it is less than 50 50 lakhs, not in crore, less than 50 lakhs. So please confirm here, borrowing less than equal to 2 crore will fall in which category? Level 4. So my dear students, this is level 4, Newman. Check here, level 4. Fine. Next one, SS Finance is financial institution. Oh, carrying business in India since 10 years. Since this is financial institution, banking, financial institution and insurance is level 1, my dear students. Check here. Banking, financial institution and insurance is level 1. So your answer is level 1 entity. Next one, DD Finance holding company of SS. It means in point D, SS Finance you will find entity mentioned in not point 5, it should be point D. So holding and subsidiary of level 1 will be classified as level 1 only. Yes or no? Here you can see. Done. So again this is level 1 entity only. Last one, reliable cooperative bank, a cooperative bank carrying banking operation. Okay, banking operation, it means level 1. In level 1, banking, NBFC or other banking, financial institution and insurance companies will fall in level 1. Check here my dear students, level 1 entity. So in the exam what you can do, this chart you can present and accordingly point A, B, C, D you can answer. This is level 1, level 2, level 3, level 4. I hope this part is clear my dear students. Now my dear students, we will see some based on Accounting Standard 3 cash flow statement. Question number 6. From the following particulars, calculate cash flow from operating activities. Now my dear students, as per AS 3, there are 3 activities which we have to show in cash flow statement: operating activity, investing activity and financing activity. But the beauty of this question is what? Only we have to present operating activity. Yes or no? Now in operating activity we present what my dear students? The total flow of cash from the business operations, and at the end we separately show taxes paid. Fine. Okay. Now here if you see the data which they have given my dear students, retained earnings they have given. So final profit after deduction of provision for tax, after deduction of all the appropriations, the final retained earning is this much. Fine. Now this retained earning then will be added in the balance sheet. Final retained earning after provision for tax and appropriations. So if you see this particular question carefully, we will put dot here my dear students. This is retained earnings after subtraction of everything including appropriation. So if you see in this particular table, there are 2 appropriation: interim dividend paid and dividend paid. Can I say it's appropriation? It is already subtracted from the retained earnings. So your job is what my dear students? In operating activity, our operating activity starts with net profit before tax. Before tax, why? Because at the end separately we subtract tax. So to get net profit before tax, like this is my profit and loss account, here I need net profit before tax. This figure I need. And here they have given retained earnings, which is after subtracting provision for tax as well as in all the appropriations. So from the NPBT they have subtracted provision for tax and all appropriations. Final answer is retained earnings. Now think and then answer my dear students. From this retained earning, if I want net profit before tax, then what I have to do? We have to add back appropriation, we have to add back provision for tax. So here if you see provision for tax is there, we'll put 1 dot. This will be added, we will put 1 dot, appropriation will be added, we will put 1 dot, this appropriation will be added. Then what I will get? Net profit before tax. Now in my profit and loss never discriminates between non-cash item, cash item, non-operating item and operating items. PL records everything on accrual basis, Income should be recognized when it is earned, whether it is from investing activity, it is from financing activity, it is from operating activity. Expense should be recognized when it is incurred, whether it is from operating, investing, financing. PL never discriminates. But I need only here operating items, and hence we need to eliminate non-operating items and non-cash items from this particular net profit before tax. So my dear students, please confirm here depreciation is what? Non-cash item. Fine, non-cash item. Now please tell me, depreciation is charged against the profit. It is debited to PL. So it is already debited, my NPBT is less. So I have to increase the net profit before tax to find out cash profit is how much. Fine. So this will be added, my dear students. Loss on sale of machinery. Can I say it is investing activity? Now this is again loss, but this is non-operating losses. It is debited, NPBT is less. To find out the operating profit, we need to add back. So add. Then premium payable on redemption of preference share, or you can say premium payable on redeemable preference shares. So preference shares is capital structure. Can I say it's financing activity? Yes or no? If it is financing activity, now this premium which we are paying, can I say it is an expense if nothing is mentioned? So it will be charged to PL. If it is debited to PL, NPBT is less. To find out the operating performance, we need to add back this. So this will be added again. Next is profit on sale of investment is investing activity. This profit, it is credited to PL. My NPBT is more. To get the operating performance, we need to subtract this. Then refund of tax, it is income. Fine. So tax related income we need to eliminate right now, because at the end we will subtract separately taxes paid. Fine. So refund of income tax will be credited to PL. My NPBT is more, so we need to subtract this particular item to get operating profit before taxes, before the adjustment of taxes. Fine. So here if you confirm, retained earning is after subtracting everything, after subtracting provision for tax and all the appropriations. So your job is what? To add back provision for tax, to add back all the appropriations to get NPBT is how much. So here they have written the combined solution. If you confirm, my dear students, please check here. 17,000 we are starting with, 17,000 done. Now in the exam, first add back provision for tax and all the appropriation to find net profit before tax is how much. Fine. So please confirm here, 7,000 is the provision for tax, 10,000 and 8,000 is the appropriation. So 7,000 is the provision for tax, 10,000 and 8,000 they are the appropriation. Added back. Now to find operating profit, we need to eliminate non-operating item. To find cash profit, we need to eliminate non-cash item. So please confirm now depreciation. Depreciation will be added 4,000. Please confirm here, depreciation added 4,000. Next item is what, my dear students? Loss. Loss will be added 3,000. Done. Next is what, my dear students? Premium paid 2,000 will be added. So 2,000 added. Next is what, my dear students? Profit on sale of investment, 10,000 subtracted. Refund of tax, 1,000 subtracted. So here 1,000 subtracted, 10,000 subtracted. Now you will get operating profit before working capital changes. Operating profit before working capital changes. Now we will do plus minus changes in working capital. Please check here. Always you will compare opening with the closing figures. So 2020 will be compared with 2023. Now here operating, see, if you will observe your balance sheet, that includes three types of assets and liabilities: operating in nature, financing in nature, and the investing in nature. In operating activity, we are just concerned with operating assets and liabilities, which includes debtor, creditor, outstanding expense, prepaid expense, bills receivable, bills payable, all your current assets and current liabilities. Fine, my dear students. So try and understand. Here trade receivable 10,000 to 12,000, there is increase of 2,000. So use your little brain and answer. There is increase in debtor. It means we sold the goods, but we have not realized our money. Trade receivable means what? Debtor. We sold the goods, but we have not realized our money. So money is blocked. Money is blocked and hence this will be subtracted in cash flow statement. Trade payable 7,000 to 15,000, my dear students. So there is increase of 8,000. Think and then answer. Trade payable means creditor. We bought something, but we didn't pay. We bought something, but we didn't pay. It means, can I say outflow is avoided? Outflow is avoided is as good as inflow. So this will be added, my dear students. Provision for tax, separate provision for tax account we will prepare at the end to find out tax paid is how much, correct? Prepaid expenses, this is prepaid expenses 2,000 to 1,000, so there is a decrease of 1,000. So think and then answer. Earlier we used to pay 2,000 in advance, now we are paying only 1,000. So can I say outflow is avoided is as good as inflow? This will be added. So less money is blocked. No, earlier 2,000 we blocked in the last year. This time only 1,000 we blocked. It means 1,000 rupees outflow is avoided is as good as inflow. And outstanding expenses 1,400 to 1,000, there is a decrease of 400. Why? Because 400 rupees we paid, it is outflow. Outflow, then we need to subtract less. Fine. So my dear students, here please confirm. Trade receivable increase of 2,000. Please increase in trade receivable 2,000 we need to subtract. Then trade payable increase of 8,000 we need to add it back. Then decrease of 1,000 prepaid expenses add. So decrease in prepaid expenses 1,000 added. Outstanding expenses decrease of 400 subtracted. 400 subtracted. What we will get, my dear students? Cash generated, because answer is positive, 46,600 from operations. Okay, 46,600 is what cash generated from operating activities. From this separately we will subtract, because it is the standard instruction to show the income tax paid separately. Now to get this income tax paid, my dear students, all of you, we always prepare provision for tax account. Provision is liability. If you confirm here provision for tax, opening is 4,000. So here we will write opening 4,000. Closing amount is how much? Please check here, 7,000. Now in this question they have given provision for tax 7,000. So provision, any provision entry is what? PL to provision. PL to provision is the journal entry for provision. Fine. So here we are creating provision for tax. My entry would be PL to provision for tax. So provision for tax credit side we will write by profit and loss. Amount is how much, my dear students? Provision for tax 7,000. So balancing figure is what, my dear students? Tax paid. Fine. There was opening provision of 4,000. During the current year we created 7. Out of that closing is only this much. So remaining is paid. That amount is how much? 4,000. So tax paid is 4,000. So here tax paid is 4,000, but in the question some tax refund is given. Yes or no? So tax refund is how much? 1,000. That will be subtracted. So 4,000 minus 1,000 is how much? 3,000. Now finally you will get your net cash flows from operating activities 43,600. I hope the whole question is clear, my dear students. Cash flow statement, it was very simple sum. Just you need to understand retained earning is the final profit after subtraction of provision for tax and all the appropriation, add back to find NPBT. Now eliminate non-cash item, non-operating item to get cash profit from operating activities. Then separate presentation of the tax paid like we did here, my dear students. Finally you will get net cash flows from operating activities. I hope cash flow statement sum is clear. Now my dear students, next sum related to AS 18, related party disclosure. Question number 7 it is. Related party disclosure. Question number 7. Please see here, they have given two situations, and what they are saying, you are required to suggest how the above transaction will be treated as at closing date 31st March 23 for the purpose of AS 18 related party disclosure. First one, my dear students, A Limited enters into an agreement with Mr. Bhola for running a business for fixed amount payable to the later every year. Fine, Mr. Bhola they hired for running or operating day-to-day business activities. The contract states that the day-to-day management of the business will be handled by Mr. Bola, fine, day-to-day management, while all financial and operating policies decisions are taken by board of directors. Mr. Bola does not have any voting power in A Limited. So logically, he is not related party. That's it. You remember there is definition of related party in accounting standard 18. As per para 3, if you know there is clause A which says about what, my dear students, holding subsidiary and fellow subsidiary relationship. B part is what, my dear students, associates and joint venture. C part is what, individual related items, fine, individual who can control or significant influence. D is key managerial personnel and their relatives, and E is what, enterprise in which person mentioned in C and D can control, etc. Fine. So here if you confirm, out of this 5 heads, Mr. Bola, you can say individual, but that individual, Mr. Bola, is not controlling any financial or operating policy. Even he don't have any voting power in the company. So logically speaking, can I say Mr. Bola is not related party as per para 3 of AS 18. Fine. Please come here, my dear students, what it says. Mr. Bola will not be considered as related party of A Limited in view of provision of AS 18 related party, which states this individual owning means what, my dear students, is para 3 condition C. You can write that condition C first and then you can explain. Individual directly or indirectly an interest in voting power of reporting enterprise that gives them control or significant influence over enterprise, and relative of such individual are related parties as per para 3C. In the given case, in the absence of share of ownership, oh beautiful word, in the absence of share of ownership, Mr. Bola would not be considered to exercise significant influence on A Limited, even though there is agreement giving him the power to manage the company. That is the day-to-day business activities, my dear students, that anybody can do. Further, the fact that Mr. Bola does not have ability to direct or instruct board of director does not qualify him as key managerial personnel, because operating and financial decisions will be taken by board of directors, and Mr. Bola, even he is not having any voting power in the company. So logically speaking, he is not related party. Second says what, Shri Manoj, a relative of key managerial personnel, that is para 3 point number D, key managerial personnel and the relatives are related party, received a remuneration 3,50,000 for his services in the company for the period from 1st April to 30th June. On 1st July 22, he left the service. So what? In financial year 22-23, he will be considered as what, my dear students, related party at any time. If we have paid any amount to the related party, that must be disclosed. Fine, as per ES 18. So my dear students, please check here. According to ES 18, related parties are considered to be relative if at any time during the reporting period one party has the ability to control another party or exercise significant influence over other party in making financial and operating decisions. At any time, if any fellow has ability to control another party, correct, in making financial and operating decisions, that particular party will be treated as what, related party. Hence, Mr. Manoj, a relative of key managerial personnel, should be identified as related party for disclosure in financial statement for the year 31st March 23, that is financial year 22-23, as he received a remuneration for his services from this to this period. I hope this sum was very simple, my dear students. Now, next question, ES 24, discontinuing operations. Question number 8. The similar sum is there in JKSC textbook as well. Arzu Limited is in the business of manufacture of passenger car, okay, and commercial vehicle. So two things they are manufacturing right now. The company is working on strategic plan to shift from passenger car segment to commercial vehicle segment. Okay, so they want to switch over from passenger car to commercial vehicle. Coming 5 years, so it is not today they are doing. Over a period of 5 years, they would like to do the same thing. However, no specific plan have been drawn for sale of neither the division nor its assets. There is no strategic plan. As part of its plan, it has planned that it will reduce the production of passenger car by 20% annually. So every year 20%, 20%, 20%. So in 5 years time, they will shut down the passenger car segment and they will just run commercial car segment. It also plan, there are only plans right now, okay. Also plan to commence another new factory for manufacture of commercial vehicle plus transfer of employee in phased manner. Fine. So my dear students, we will shut down one particular segment which is passenger car, and we will start in 5 years time one more factory for commercial vehicle, and we will shift all the employees from this particular segment to another one. Fine. This is the plan. This plan have not been approved from the board of directors, and the new factory for manufacture of commercial vehicle has not yet started. You are required to comment if mere gradual phasing out in itself can be considered as discontinuing operation within the meaning of AS24. No. Can I say mere gradual phasing out in itself is not considered as that discontinuing operation? It's clearly written in AS24, my dear students. Fine. So gradual phasing out will not be considered as what? Discontinuing operation. Please see here the answer, my dear students, what it says. Mere gradual phasing out is not considered as discontinuing operation as defined under AS24. Now in AS24 there are 4 circumstances which we will not treat it as discontinuing operation. Here they have given those 4 items. Number 1, gradual phasing out of product or service. Number 2, discontinuing even if relatively abruptly several product within ongoing line of business. If we discontinue 2 or 3 product from the ongoing line of business, even that will not be treated as what? Discontinuing operation. Let's take an example. The Amul produces 15 flavors of ice cream. Fine. But in the market only running flavors are 3. So Amul took the decision that they will discontinue abruptly right now 12 flavors. So entire lot now is of only 3 flavors. So my dear students, still we are selling the ice cream, still we are serving the customers, but now only 3 flavors are there in market. So we discontinue that 12 flavors. It does not amount to discontinuing operation because the business is still there. We are still serving the customers. We are still getting the same revenue. The only thing is what? Instead of now 15 flavors, now we are just serving to the public only 3 flavors. Fine. Next is what? Third one, shifting of some production or marketing activities for a particular line of business from one location to another. The Tata Motors shifted from West Bengal to Gujarat, their plant, that nano plant. My dear students, it is discontinuing operation? No, it is just shift of location. The same business is there, they are generating the revenue. Fine. They have not removed anyone, my dear students. So it is not discontinuing operation. Fourth, closing of facility to achieve productivity improvement or cost saving. I am having total 5 factories and total production out of the 5 factories 1 lakh units. If I close down one factory, still 1 lakh units can be produced out of these 4 factories. So it is better to close down one factory for the cost saving purpose, for productivity improvement. Yes or no, my dear students? So shutting down of one factory for cost saving purpose and still maintaining the same production does not amount to what, my dear students? Discontinuing operation. So these 4 things are given in AS24. Gradual phasing out is not discontinuing operation. Discontinuing any product from ongoing line of business is not discontinuing operation. Shifting of any marketing or production activity from one location to another location is not discontinuing operation. And fourth one, my dear students, closing down of any facility for improvement of productivity and the cost saving is not discontinuing operations. So out of this 4, they have given case study based on this first one. So you can first write these 4 points and then you can explain based on the above. Gradual phasing out will not be treated as what? Discontinuing operation. In view of the above, mere gradual phasing out in itself cannot be considered as discontinuing operation. The company's strategic plan also has no final approval from the board through a resolution, and there is no specific time bound activity. See, if you want to say this discontinuing operation, then it should be in time bound manner, my dear students, like shifting of asset and employees. Moreover, the new segment commercial vehicle production line in new factory has not started. Fine. So first you can write this 4 points, and then you can conclude that mere gradual phasing out in itself cannot be treated as what discontinuing operation. Fine. I hope, my dear students, even this question number 8 is clear. Now, my dear students, next AS 13, accounting for investment, question number 9. It's numerical sum. My dear students, what it says, ABC Limited hold means its opening balance 2015%. Okay, it's 15%. It means it is fixed income bearing security. Fine. So whenever in the exam investment based sum comes, no, you should prepare timeline properly. You should prepare your timeline very well. If your timeline is ready, my dear students, then your ledger preparation part, that is this particular part, it is 5 minutes task then. Fine. So along with me, please concentrate. If it is fixed income bearing security, then on timeline in JKSEB, first write last interest due date. Now as of now, I don't know what is my due date in this particular question, but I will start with the last interest due date. Now tell me, it says what? 2015% debentures of 100 each in XYZ as on 1st April 2022. So financial year 22-23 we are doing accounting at cost of 2,50,000. Interest payable 30th June and 31st December each year. Fine. Then following other details are given. There is purchase, sale, and there is cum interest and ex interest, cumulative interest. Interest is included, hence we need to separate between cost is how much, that is ex interest is how much, and interest is how much. If it is interest, then separately we will calculate interest. You are required to prepare investment account showing value of holdings on 31st March at cost using first in first out method. Okay, so at the time of sale we need to calculate, my dear students, profit or loss. That we will take care by first in first out method. Come on, we will plot our transactions on this particular timeline. Check. Hold 2000. So first point, its opening balance. Okay sir. Face value is how much? 2000 debentures. For each debenture face value is 100. So face value is 2 lakh. Why we need face value? To calculate the interest, my dear students. Then they have given cost. Cost means what? You can say X interest price, which is 2,50,000. And you already know if there is opening balance, so we need to check opening accrued interest is how much. Fine. So always write on the timeline face value, cost is how much, and the interest calculation is how much. If it is opening balance, then opening accrued interest. If it is closing balance, then closing accrued interest. Now accrued interest will come if there is lag between interest due date and the closing date. My dear students, interest due dates are 30th June and 31st December. So continue your timeline keeping in mind these two interest due dates. Fine. If you check here, now 1st May, debenture purchased 1000 debentures. So 1st May 22, there is purchase, face value 1000 debentures, then at the end we will add 2 more 0 because face value is 100. Fine. Okay. Now they have given here, it is cum interest 1,05,000. So this is CI 1,05,000. If it is cumulative interest, then we need to divide into 2. X interest is how much and interest is how much. Fine. So we will calculate interest and X interest will be taken as balancing figure. Fine. My dear students, further 1st November, but before that if you confirm 30th June will come. So here 30th June 22, this is interest due date. We will calculate interest at the end, my dear students. Next is what? 1st November 22. So here I'll write 1st November 22 sold. How many debentures? 1200 debentures at X interest 128,200. Sold 1200. So here we will write face value equal to 1200 and at the end 2 more 0. There is X interest price which they have given 128,200, 128,200. Separately interest will be calculated because this is excluding interest. After 1st November, 30th November is there. Children, after 1st November, next 30th November 22. This is purchase 500 debentures, so face value is 50,000. They have given X interest 54,500. Separately, interest will be calculated for this. On timeline, just you have to write nature, purchase or sale, face value, X interest, cum interest, and interest calculation separately. Now 31st December, if you observe closely, 31st December is the interest due date as well as 31st December is the transaction date. So whenever the purchase sale transaction comes along with interest due date, first solve purchase or sale and thereafter interest due date, my dear students. So here there is sale transaction 31st December. So you'll write 31st December 22 purchase or the sale transaction, my dear students. Sold. Tell me face value equal to, if you check here, 900 debentures, so 90,000 is the face value. They have given cum interest, my dear students, 1,18,000. So divide into 2. X interest is how much and interest is how much? X interest will be taken as was balancing figure. 31st December 22, my dear students, its interest due date as well. And finally 31st March 23 is the closing date. On closing date we will take care two things. Number one, closing accrued interest, and second, my dear students, valuation. For valuation purpose they should give market price, but they have not given any market price in this question, so valuation we will avoid, only closing accrued interest would be there. Fine. If you observe this particular timeline, there is last interest due date, then opening date 1st April 22, then purchase, interest due date, sold, purchase, sold, interest due date, then the closing date. Fine. Tell me, my dear students, in this particular timeline two interest due dates are there, 30th June and 31st December. So tell me, opening date is 1st April 22. So before that the interest due date was, last interest due date was 31st December 21. 31st December 21. Okay. Now my dear students, we will calculate interest with the different color pen I am showing. Interest will be calculated as face value into rate. What is the rate, my dear students? Here 15% into period, number of months divided by 12 months, and the period will be counted from last interest due date to transaction date. Yes or no? So come on everyone, now use your calculator, my dear students. First part, opening balance. Fine. Face value is 2 lakhs into 15% into last interest date 31st December, transaction date 1st April. So December gone, Jan, Feb, March, 3 by 12 it is, 3 divided by 12. The answer is 7,500. Next is purchase, 1st May, last interest due date is 31st December. So Jan, Feb, March, April, end of April is as good as starting of May, 4 months interest we need to calculate. So 1 lakh is the face value into 15% is the rate for 4 months, comes to 5,000 interest. So excluding interest is 1 lakh. Now interest due date, on the interest due date 30th June, the total holding in my hand 2 lakh was already there, 1 lakh more purchases. So 2 plus 1, 3 lakhs face value I am having right now. So 3 lakhs into 15% for 6 months, because it is interest due date at the interval of 6 months we are getting the interest. Fine. This 22,500. Now sold transaction, it is face value is 1,20,000 into 15% for, please tell me, when on 1st of November you are selling, your last interest due date would be this now. Yes or no? 30th June. So tell me, June gone, July, August, September, October. End of October is as good as starting of November. So 4 months it is 4 divided by 12. It is 6,000. Okay, fine. Further, 30th November, my dear students, face value is 50,000 into 15% for, it's 30th November. So last interest due date 30th June. Thereafter July, August, September, October, November, end of November, 5 months it is. So 5 divided by 12, it is 3125. Fine. Now 31st December, exactly 6 months are over. The due date it is, but before due date we will solve transaction, either purchase or sale. Here there is sale transaction. Face value 90,000 into 15% for 6 months, it is 6750. If you will subtract 1,18,000 minus this, so X interest would be 1,11,250. Fine. Now interest due date. Now please tell me on interest due date the total holding in my hand. Last interest due date the holding was 3 lakhs. Last in 30th June, on 30th June the total holding, opening plus purchase 3 lakh. Out of 3 lakh we sold 1,20,000 face value, then we bought 50,000, then again we sold 90,000. Now total holding 1,40,000. On that 15%, my dear students, for 6 months comes to 10,500. Fine. Thereafter there is time gap of 3 months. Please check. And on accrual basis we should book the income in the year in which it is earned. So for this 3 months time we need to calculate the income, though it is not received, because accrual concept says what? Income should be recognized when it is earned, received, receivable. That is irrelevant factor, my dear students. So please confirm something on my hand. On 31st of March 2023, the total holding I am having 3 lakh was there on the last interest due date. Out of that we sold 120, then we bought 50,000 minus 90,000. So 1,40,000 into 15% for 3 months comes to 5250. Fine. Now simply, if your timeline is ready like this ledger is nothing for you. In 5 minutes time you can finish, my dear students. Come on, we will cross verify. If you check my first transaction, last interest due date we cannot post, let it be. Now opening balance. Please check here. Investment account debit side, 1st April, 2 balance brought down. Face value is 2 lakhs. Yes. Cost is 2,50,000 and interest is 7,500. 7,500, 2,50,000. Done. Next, purchases. Investment account debit to bank account on 1st of May. Face value is 1 lakh. X interest, that is the cost is 1 lakh and the interest is 5,000. Cost is 1 lakh, interest is 5,000. Check. Face value is 1 lakh, interest 5,000, cost is 1 lakh. Quickly you can write if your timeline is ready. Next is interest due date. Children, in this particular format, this interest column represents interest account. Simple. Interest column represents interest account. So my dear students, we received interest, so money comes in debit, bank account debit to interest. So interest account credit side by bank 22,500, you can confirm. Yes. Sold. When you will sell your investment, money comes in debit to investment. So investment credit side by bank. Face value 1,20,000. Okay. Interest is 6,000 and X interest 128,200. 128,200 and interest is 6,000. Whenever there is sale transaction, we need to calculate what, my dear students? Profit or loss. And here we are following which method? First in, first out method. So carefully please check here. I am having 2 lots right now. Opening balance first lot and there is one purchase second lot. Then we sold something. So how to calculate profit loss for the first sale? Children, there is sale transaction. Concentrate. Now there is first lot with me. Face value 2 lakhs. If you confirm, whose cost is 2,50,000. Whose cost is 2,50,000. Now we sold face value 1,20,000. So below this we will write face value 1,20,000. So if the face value is 2 lakh, cost is 2,50,000. If the face value is 120, so by doing cross multiplication, cost is how much? Cost of Investment sold is how much? 2,50,000 into 1,20,000 divide by 2 lakh, it is 1,50,000. So my dear students, cost of investment sold is 1,50,000 and we sold it for 128,200. 128,200. So my dear students, this is bad deal. 128,200, hence there is loss of 21,800. That 21,800 loss we have recorded by PL. In the bracket you can write this is loss. I hope this particular part is clear, my dear students. Okay. Further, that is purchase transaction 30th November. So investment account debit to bank. Fine. Face value 50,000, excluding interest 54,500 and interest is 3,125. 3,125, 54,500, face value is 50,000. Game over. For the purchase, simply you have to incorporate. For the sale, you need to calculate at the end profit loss. My dear students, next again sales. So investment account credit side, we will write buy bank. 90,000 is the face value, excluding interest 1,11,250 and interest is 6,750, 6,750, 1,11,250 and this is 90,000. Whenever there is sale transaction, we need to calculate what profit or loss. Fine. So here we sold 90,000 face value. So again sale transaction. Now if you confirm, all of you, there is first lot whose face value is 2 lakh. Out of that 1,20,000 already sold. So remaining face value is 80,000. So you can understand we sold 90,000 face value. Out of that 80,000 is from first lot and 10,000 face value we need to take it from second lot. So here please confirm 2 lakh is the total face value of first lot whose cost is 250. Fine. Out of that 120 already sold. So from here we will take 80,000 face value whose cost is how much, and the second lot my dear students 1 lakh face value whose cost is 1 lakh. From here we will take 10,000 face value, the cost is how much. Fine. So by doing cross multiplication 2,50,000 into 80,000 divided by 2 lakhs, this is 1 lakh. 1 lakh into 10,000 divided by 1 lakh, this is 10,000. So tell me my dear students, cost of investment sold, the summation of 2 is 1,10,000 and we sold it for 1,11,250. Can I say it is good deal? So there is profit of my dear students 1 or rather you can say this is 1,250. Yes or no? 1,11,250 minus 1,10,000, there is profit of 1,250. You can confirm this profit is here 1,250. To profit and loss. In the bracket write down this profit. Moral of the story is simple. If you are ready with your timeline, your ledger preparation will become very simple. Fine. Next is what my dear students, interest due date. So money comes in, debit to interest 10,500. So credit side we will write buy bank interest 10,500. Last one my dear students, accrued interest 5250. So here if you confirm 5250 or you can separately write as well, buy accrued interest 5250, there is no issue. Fine. At the end when you will close your ledger, your face value would be 1,40,000. Your remaining principal cost or X interest is 144,500 is the balancing figure, and even you have to balance your interest column and the balancing figure 35,375 will be transferred to profit and loss. So instead of making so much working here, fine, you can see the working. Instead of this, what you can do my dear students, simply prepare this timeline and your job is over. So if you have 10 minutes time in the exam, spend 5 minutes for preparation of the timeline. Your ledger preparation part will become very simple. Getting my point? All of you? With this my dear students, this sum is over. Now next sum of discussion is from AS 16 borrowing cost. Is from borrowing cost. Again simple sum, good sum it is. What it says, H Limited begun the construction of new building. It takes substantial period of time. So if any asset is taking substantial period of time, then the interest borrowing cost will be added in the cost of asset. On 1st April 22, it obtained special loan 6 lakh on 1st April 22 at an interest of 12% to finance the construction. Can I say it is specific borrowing? Specific borrowings. The company's other outstanding two non-specific loan. Non-specific means what, my dear students? This is general borrowing. If there is general borrowing, then you know that first we need to find out the weighted average rate. Okay, we will see that. 30 lakh rupees we took at 14% and 54 lakh at 16%. The expenditure incurred on the building project was as per given below. My dear students, in that particular year we spent this much amount. We need to find average expenses, weighted average expenses based on the time, my dear students. If you confirm my financial year is 22-23, fine. First amount we spent 12 lakh rupees on 1st May. So from 1st May to 31st of March 23, how many months are there? 11 by 12. From 1st July to 31st of March, July, August, September, October, November, December, Jan, Feb, March. It's 9 by 12. 1st October to 31st March, 6 by 12. 1st March to 31st March, 1 by 12. We need to find average expenses. Fine. The building completed by 31st of March 23. Very good. Following the provision of AS 16, you are required to calculate the amount of interest to be capitalized. Oh, and also give journal entry for one journal entry. They are asking for capitalizing the cost and borrowing cost in respect of building. Fine, no issue. Cost we have incurred, that I already know. Please confirm here. Total cost 12 lakhs plus 15 lakhs plus 27 lakhs plus 7 lakh 20,000. The total cost which we have incurred is 61 lakh 20,000. Cost we have incurred 61 lakh 20,000 for the building. Just we need to calculate the borrowing cost. Both the amounts we will club and one entry will come building account debit. So we will capitalize borrowing cost in the cost of building. Fine. So here my job is what, my dear students? For question number 10, question number 10, which is based on AS 16, my first working would be calculation of weighted average rate, my dear students. My job is what? To calculate weighted average rate. If you confirm my loan amount, loan 30 lakhs and another loan is of 54 lakhs. Okay, sir. The rate which they have given in the question is 14% and 16%. So we will get, my dear students, amount of interest 30 lakhs into 14%. It's 4 lakh 20,000. 54 lakhs into 16%. 864,000. So total interest 12 lakh 84,000 and this is 84 lakhs. So here you will get weighted average rate is nothing but interest divided by loan into 100. So 12 lakh 84,000 divided by 84 lakhs into 100, the rate is 15.285 it is. So we will take 29% approximately. My first working is over. My working note number 2, my dear students, calculation of average expenses. So we have incurred during the year 4 times. The amounts are 12 lakhs, 15 lakhs, 27 lakhs, 7 lakh 20,000. Number of months we have already calculated, my dear students. 11 by 12, 9 by 12, 6 by 12, 1 by 12. If you will confirm, this is 11 lakhs, Check on calculator. 11 lakh 25,000 is 13 lakh 50,000. This is 60,000. So the total is how much? 36 lakh 35,000. And here this total is 61 lakh 20,000, which we have already calculated. 61 lakh 20,000. Fine. So we got two things here. Average rate is 15.29% for the general borrowing, and 36 lakh 35,000 is the average expense during the year. Average expense during the year, my dear students. Fine. Now my main objective is what? Calculation of borrowing cost. Calculation of borrowing cost. So my dear students, interest on specific borrowing. See, whenever you are spending the amount, then it is presumed that first you will spend out of the specific borrowing. So my specific borrowing in the question is how much? 6 lakhs. You can check, and the rate is 12%. So we spend on an average 36 lakh 35,000 during the year. So 6 lakhs rupees first we presume that we have incurred for the building. First we spent our specific borrowing 6 lakhs into 12%, which comes to, my dear students, 72,000. And then interest on non-specific, or you can say general borrowing. So total average expenses 36 lakh 35,000. This total expense is out of first specific borrowing 6 lakhs. So remaining amount we have utilized out of general borrowing 30 lakh 35,000 out of general borrowing, and the rate for this 15.29%, which we have calculated, my dear students. Fine. So it's 30 lakh 35,000 into 15.29%. The answer is 46 40 52. It's 4 lakh 64,052. The total is how much then, my dear students? It is 5 lakh 36,052. 5 lakh 36,052. And hence calculation of borrowing cost is done, and they have asked one journal entry, my dear students, and the journal entry would be building account debit to bank account. So when you will spend amount for the building, my dear students, when you will spend amount for the building, so the total cost for the building 61 lakh 20,000 is the cost of construction, plus the borrowing cost is how much? 5 lakh 36,052. The summation 61 lakh 20,000 plus 5 lakh 36,052, it is 66 lakh 56,052. 66 lakh 56,052. So in institute module they have directly passed this particular entry, building account debit to bank, cost of building, cost of construction plus the borrowing cost. I hope the sum was very simple. Working note 1, average rate, working note to average expense, then calculate interest, my dear students, that is borrowing cost. First use the specific borrowing amount, then remaining will be utilized out of the general borrowing, then one journal entry. I hope this particular sum is clear, my dear students. If you see here, they have written like this: 536,052. This is the journal entry, building to bank and two workings. Fine. Come on. Now, next question is based on AS 19 leases. Very simple sum it is. Question number 11. Suraj Limited wishes to obtain machine costing 30 lakhs by way of lease. Very good. The effective life of the machine is 14 years. Okay. Life 14 years. But the company requires it only for first 3 years. But I need it for 3 years only. Fine. It enters into an agreement with Star Limited for lease rental for 3 lakhs per annum payable in arrears, and the implicit rate of interest is 15%. So my dear students, lease rental is equals to 3 lakhs per annum, my dear students. The chief accountant of Suraj Limited is not sure about the treatment of the lease. Treatment of the lease depends on the types of lease, whether it is operating lease or the financing lease, my dear students. If it is financing lease, then the accounting is different. If it is operating lease, it means that is normal rent which will be charged to profit and loss either by following SLM or any other suitable ratio, that is output ratio or the benefit ratio if given in question. 6. Your advice, very good. Use annuity factor 15% for 3 years. Is the annuity factor 2.28? Fine. So for the 3 years, the annuity factor is 2.28. So this 3 lakh per annum, you will pay this year, next year, 3 lakh, 3 lakh, 3 lakh. So what is the present value today? So to find out the present value, 3 lakh per annum into 2.28 annuity factor, if you will do, so this 3 lakhs into 2.28, my dear students, is 6 lakh 84,000. So what is the present value of minimum lease payment, my dear students? Present value of minimum lease payment is 6 lakhs 84,000, my dear students. And what is the total cost of the machine? 30 lakhs, my dear students. So please find out 6 lakh 84,000 present value of MLP divided by 30 lakhs into 100, it is 22.8%. Please now try and understand. To classify any lease as finance lease, 5 conditions are there in the standard, my dear students. Number 1, at the end of the lease period, legal ownership will be transferred. Fine. As soon as you will pay the last installment, I will transfer my legal ownership to you. Hire purchase. Point number 2, asset is of specialized nature. Point number 3, at the end, by paying some nominal amount, I will transfer the legal ownership to you. Then point 4, the life covers almost equal to, that lease period covers almost the entire life of that particular asset. Now that almost word they have not defined, my dear students. So in general we say more than equal to 75% life is covered, then in that case it will be treated as what? Finance lease. Here please confirm this is the life. 14 years is the total life. 3 years I want. 3 divided by 14, if you will do, my dear students, it is 21.43%. So it is not covering almost equal, almost the life of fixed asset. Fixed asset life is 14 years. You need it for 3 years, which is only 21.43%. It is less than 75%. Hence it is not finance lease. And the last condition is what? Present value of minimum lease payment is almost equal to fair value. What is the fair value? 30 lakhs. Now almost what they have not defined again. So we in general presume more than equal to 90%. Fine. Here it is only 22.8%. So even fifth condition is not fulfilled, my dear students. If all the 5 conditions are not fulfilled, then it is not finance lease, it is operating lease. If it is operating lease, my dear students, then in that case accounting is very simple. Any amount you pay, that should be charged to profit and loss as an expense, and the against party will record it as what? Income. It should be charged to profit and loss on SLM basis or any other suitable ratio if given in the question. Fine, my dear students. So your last 2 conditions are important. Life almost equal to, or rather lease period is almost equal to life of the asset. Here it is 21.43%, so it is not almost equal to. And present value of MLP almost equal to fair value, it is 22.8%. Hence it is not almost equal to fair value. Hence it is not finance lease, it is operating lease. Please confirm here the answer, my dear students. What it says, as per ES 19, lease will be classified as finance lease if at inception of the lease, inception at beginning, the present value of MLP amounts to at least substantially all the fair value of leased asset. Here it is 22.8%. At inception, our present value of MLP is only 22.8%. It is not almost cover the substantial fair value, correct? So we are just paying 22.8%. In the given case, the implicit rate is 15%. The present value of MLP is 6.84. We have already calculated 6.84, my dear students. Thus, present value of minimum lease payment is this much and the fair value of the machine is 30. In finance lease, lease term should be for major part of the economic life. Here we need only for 3 years out of 14 years, so it is not major part. We want it for 3 years, which is 21.43%, my dear students. Even if title is not transferred, so legal ownership is irrelevant anyway. However, in given case, the effective useful life of the machine is 14, while the lease is only for 3 years. Therefore, lease agreement is operating lease, because out of the 5 condition, none of the condition fulfilled in this particular question. Lease payment under an operating lease should be recognized as an expense in the statement of profit and loss on straight line basis, unless another systematic basis is more representative of the time pattern of the user's benefit. Use straight line method or benefit ratio. If the benefit ratio is given, use benefit ratio. Otherwise, straight line method you have to use. It should be charged to profit and loss. I hope the sum is very simple. Just you have to see the construction of the answer very well, my dear students, to score good number. Fine. So writing practice is extremely important. My dear students, next sum is based on AS 14, amalgamation, accounting for amalgamation. Actually, this sum is not for AS 14. See here, amortize all intangible asset, and we studied intangible asset in AS 26, my dear students. Fine. AS number is irrelevant in the present sum. See, when you will read the sum, you only will come to know, okay, this is the answer. Fine. So please check. Question number 12. Nourish Limited had the following transaction during the financial year 22-23. 3 transactions are there, and at the end what they are asking, Nourish follow an accounting policy to amortize all intangible asset on straight line basis over maximum period permitted by accounting standard. If you see AS 26, the maximum life is 10 years, my dear students. There is reputable presumption that the life is 10 years. Less than 10 years is allowed, but more than 10 years, unless proven, is not allowed. Fine. Taking full year amortization in year of acquisition. So whenever you acquire during the year, the full year amortization we will do. We will not go into the month calculation. Fine. Goodwill on acquisition of business to be amortized over 5 years as per AS 14. It is clearly written in accounting standard number 14. If there is any goodwill on the acquisition, that should be amortized over 5 years. So as per AS 14, amortization of goodwill in 5 years time. Any other intangible asset as per AS 26, maximum life is 10 years. If less than 10 years, then there is no issue. Fine. Check here. Nourish Limited acquired the running business of Sunil Limited. Okay, acquired. It means can I say this is AS 14, my dear students. For 10,80,000, the fair value of the net asset 5,16,000. My dear students, we paid 10,80,000. But the business value is 5,16,000 only. So we paid some extra amount. 10,80,000 minus 5,16,000. We paid extra 5,64,000. That is nothing but the goodwill. And this should be written off over 5 years as per AS 14. So in this particular year, 1,12,800 we will amortize. Fine. After amortization, the remaining value will go in the balance sheet as intangible asset. This is my first point. Come on. Second one, Nourish Limited had taken franchisee, that is normal intangible asset as per AS 26, to operate restaurant from S Limited for 1,80,000, annual fee 10%. At an annual fee 10% of the net revenue, the franchise expires after 6 years. Net revenue is 60,000. This percentage and the revenue is irrelevant. Whatever you will earn of that 10% will be annual fee. That is, can I say, matching concept. Revenue will be recorded against that annual fee will be recorded. Matching concept it is. Fine, it is revenue expenses. But what is very important, we got the franchise by paying 1,80,000. So my dear students, my point number 2, we paid 1,80,000 and this should be written off over 6 years, my dear students. So 1,80,000 divided by 6. So every year we will write off, amortize 30,000. This is my amortization for this year, 30,000. Last point. Nourish Limited incurred cost 2,40,000 to register patent for its product. So patent is 2,40,000. Expects economic life is 8 years. So my dear students, third point now, patent amount is 2,40,000 and the life is 8 years. So this time we will amortize 30,000. Correct. So game is over. Amortization for first point, second point, third point. After amortization, the remaining balance will go in the balance sheet. Come on, check the answer here. In the balance sheet, how much we will show? See, balance sheet presentation is what? It should be Roman number, asset, In that first point is what? Non-current asset. In that, my dear student, A is property, plant and equipment. In that, my dear students, intangible will come. Fine. For this, you have to prepare the note. Likewise, you can present properly. Fine. Now, note number 1, if you will see, my dear students, goodwill after amortization 451 200. Please confirm here. My point 1, 5,64,000 is the goodwill and 1,12,800. The remaining is 451 200. Fine. This figure is here. Franchise, next one. 1,50,000, simple. 1,80,000 minus 30,000. And the last one, 2,10,000, my dear students, which is what? 2,40,000 minus 30, 2,10,000. The total is 8,11,200. This working note you can present in the way I have presented here, Roman 1, 2 and 3. Fine. You will get here answer 1,12,800. This is 30,000. This is 30,000. Very simple sum it was. Fine. I hope the discussion is clear, my dear students. Shall we proceed now? Everyone. Next sum is based on AS 15 employee benefit. Question number 30. What it says? Check. Hello Limited. The similar sum is there in JKSC textbook as well as the sum is there in Institute module. Hello Limited belongs to manufacturing industry. The company received an actuarial valuation. Who is actuary? Actuary is the professional person who decides the provision amount. Fine. See, normal provision we decide in the company itself. But if it is long-term provision, then many assumptions are involved. Many technical calculations are involved. And hence, we need to take the help of actuary. So, actuary is the person who helps in determining how much provision, long-term provision we should record in the books of accounts. So, actuarial valuation for the first time, oh my god, so till date we were doing, now very first time we are taking the help of actuary for its pension scheme which revealed a surplus of 12 lakhs. So, in my balance sheet, I have created some provision and that provision is more by 12 lakh rupees. More by 12 lakh rupees. So, standard clearly says that if the actuarial valuation report says that there is surplus provision, then immediately in the same year, you need to reduce the provision. Correct? Immediately, the actuarial difference will be recorded in the same year. Fine. Please read further. So, there is more amount by 12 lakhs. Okay. It want to spread the same over next 2 years by reducing the annual contribution to 4 lakh instead of 10 lakhs. So, every year we create 10 lakh rupees provision. We contribute 10 lakh rupees. Now, this company is saying what? That it is more by 12 lakhs. So, next year instead of 10 lakh investment or provision contribution, we will only contribute 4 lakh, less by 6 lakhs. And in the next to next year, again less by 6 lakhs because provision is more by 12. Please tell them you cannot do like that. Next year less by 6 lakhs, next to next year less by 6 lakhs because it is more by 12 lakhs as per the actuarial report. Actuarial treatment should be given in the same year. In the same year. So, if your provision amount is more by 12 lakhs, immediately please reverse it. The average remaining life of the employee is 6 years. You are required to advise the company on the following item from the viewpoint of finalization of account, taking note of the mandatory accounting standard. AS 15 clearly says that actuarial gain or loss should be recognized in the same year. You cannot defer. That's it. So, if your provision is more, so you have to reduce the provision. So, provision will be debited and actuarial gain will be credited. That's it. My dear students, if you see here, according to AS 15, employee benefit actuarial gain or loss should be recognized immediately in the statement of profit and loss as income expense. Therefore, surplus of 12 lakhs is required to be credited to profit and loss statement of the current year. So, your provision is more. So, provision has a credit balance. So, provision will be debited and it will be credited to actuarial gain and actuarial gain will be credited to SPL. Yes, no, yes, my dear students. Was very simple, sir. Next question. AS 4. Contingencies and events occurring after balance sheet date. Very simple sum again it is. What it says, question 14, Surya Limited follows the financial year from April to March. It has provided the following information. 2 sentences they have given. What it says, keeping in view the provision of AS4, you are required to state with the reason whether the above events are to be treated as contingencies, adjusting event or non-adjusting event after balance sheet date. What is adjusting event? My dear students, my 31st March is over. Let's take an example. On 31st of August, the financial statements are approved. So during this period, if anything happens, whether it is adjusting or non-adjusting, that we have to decide. It is adjusting event. What is the definition of adjusting event? As per AS4, adjusting events are those events which provide additional evidence of the condition existing on the balance sheet date on 31st of March. Fine. Non-adjusting means what? No condition existing on the balance sheet date, my dear students. Okay. So keep this provision in mind and read this sentence number 1. A suit against the company's advertisement was filed by the party on 5th of April. Can I say during this period? So on 31st of March, nothing was there. They have only filed the suit, my dear students. Then they are asking 5 lakhs and still the judgment is pending. The case is in court, my dear students. So simply can I say this is contingency? This contingent liability, it is non-adjusting event. Check your first point, my dear students. Accordingly, the treatment as per ES4, number 1, suit filed against the company is contingent liability, but it was not existing as on the date of balance sheet. So case filed on 5th of April, not on 31st of March. As per ES4, contingencies is restricted to condition or situation at balance sheet date, the financial effect of which is to be determined by future event which may or may not occur. However, it may be disclosed. If there is contingent liability, you can disclose in footnote with the nature of contingency being contingent liability. This event does not pertain to condition on the balance sheet date. There is no condition on the balance sheet date. Hence, it will be treated as what? Non-adjusting event. Second one says what? Company sends proposal. Okay, this is proposal, my dear students. Try and understand. The language is absolutely fine language they have used. Company sends proposal to sell an immovable property 45 lakhs in March. So they have just sent the proposal. That is negotiation, that's it. Proposal, negotiation does not amount to condition on the balance sheet date, my dear students. The book value of the property is 30 lakhs as on year end. However, deed was registered 15th April. So during this period, 15th April, the deed registered, but still it is non-adjusting event because the registration do not provide any condition existing on the balance sheet date on 31st of March. Condition, or rather 15th April, the registration does not provide any condition existing on the balance sheet date. On the balance sheet date, only the proposal was there. No final terms and conditions were decided, my dear students. Fine. But instead of proposal, if they use word sale agreement, we have already entered. So before 31st of March, if the sale agreement is entered into and the registration is taking place during the EABD period, event after balance sheet date period, that is after balance sheet before approval, then it is you are adjusting event, my dear students. So registration is there, I can understand. But on 31st of March, if the proposal was there, it is non-adjusting event. On 31st of March, if the sale agreement was there, the terms and conditions were finalized, then it is adjusting event. So here proposal word is there on 31st of March. Proposal does not mean condition on the balance sheet date. Hence, it is non-adjusting event. Instead of proposal, if the agreement word is there, then it is adjusting event. If you confirm, my dear students, here in this case, no adjustment to asset and liability is required. The event does not affect determination and condition of the amount stated in financial statement. There was just proposal. Hence, sale cannot be shown in the financial statement. Sale of immovable property is event occurring after balance sheet date is non-adjusting event. Fine, non-adjusting event. I hope the things are clear, my dear students. Now, next, sum is based on AS7 construction contract. Sum is based on construction contract. Question 15 says what, my dear students? Please check. The following data is provided for Messrs. Raj Construction. So they have given some bullet points. What they want? You are required to compute the percentage of completion. Okay, so percentage of completion, cost to cost method we follow. Cost to cost method we follow. That is actual cost incurred till date divided by total estimated cost of completion. The contract revenue they want. Simple. Contract revenue is nothing but contract price multiplied by percentage of completion, my dear students. Then cost to be recognized. Whatever you incurred, that you can record. Exception is there, my dear students. Para 35. Fine. As per ES 7, come on, we will read the sum. What it says, contract price they have given 85 lakhs. Done. So contract price, this is the main problem area of ES 7. Contract price we will get over contract period. How much out of it we can record in first year, second year, third year, that is over contract term. So contract price is 85 lakh. Okay, we agreed upon. Now here, material issued 21 lakh, out of which material costing 4 lakh is still lying unused. Okay, so out of 21 lakh, 4 lakh we have not used. So actual expenditure during the current year is how much? 21 minus 4, my dear students. It is 17 lakhs. Next is labor expense for workers engaged at site, 16 lakhs, out of which 1 lakh is still unpaid. So can I say expense is 16 lakhs only as per accrual concept? Total expense is 16. Out of that 1 lakh we have not paid. No issue. 16 lakh is the current year expense. Whenever you want to pay, you can pay. But if the question says 16 lakhs paid and 1 lakh is outstanding, then my current year's expense would be 17 lakhs. Yes, no, yes, my dear students. Fine. Here they are saying total 16, out of that 1 is unpaid. No issues. As per accrual concept, 16 lakh is the expense for current year. Then specific contract cost is 5 lakhs. So this will be added. Subcontract cost 7 lakhs. Advance paid to subcontractor 4 lakh. This 4 lakh we need to ignore, my dear students. My cost is how much? I have paid 7 lakh rupees. Rather, I am supposed to pay 7 lakh rupees. Irrespective of the amount paid, current year expense is 7 lakhs. Subcontract cost 7 lakhs. Further cost estimated to be incurred to complete the contract 35 lakhs. Okay, this is further cost of completion. Now, please confirm, my dear students, here contract cost. So, first one is what? Material 17 lakhs. Then labor, my dear students, 16 lakhs. Then specific cost is how much? 5 lakhs. And then finally subcontract charges, how much, my dear students? 7 lakhs. So the total contract cost is how much? 17 plus 16 plus 5 plus 7, it's 45 lakhs. Fine. In this I will add further estimated cost of completion is how much? 35 lakhs. So children, total estimated cost of completion 45 plus 35, it's 80 lakhs. Okay. So my dear students, percentage of completion is nothing but cost incurred till date 45 lakhs divided by total estimated cost 80 lakhs into 100, my dear students, into 100, which comes to, use your calculator everyone, 45 divided by 80 into 100, it is 56.25%. And contract revenue they are asking. So contract revenue is nothing but contract price is how much? 85 lakhs into 56.25%. So 85 into 56.25%, it is 47.8125 lakhs. All three answers done, my dear students. Contract cost 45 lakhs, percentage 56.25%, and revenue is this 47.8125 lakhs. If we confirm the answer here, check. Contract cost incurred till date 45, total estimation is 80, percentage of completion 56.25%, and here contract revenue 47.8125 lakhs, or you can write in proper figure, correct? Here, my dear students, try and understand para 35 may come if your total estimated cost is more than contract price. Here your total estimated cost is 80 lakhs and your contract price is 85 lakh. It means you are in win-win situation. But what if the reverse situation is there? Total estimated cost 85 lakhs and contract price is 80 lakhs. Then it will attract para 35. You know para 35, you need to create additional provision for loss. Yes, no, yes, my dear students. But in this present case, the contract price is more and the estimated cost is less. I hope This particular sum is clear, my dear students. Now, my dear students, next sum is based on AS9 revenue recognition, which is your question number 16. Following information of BS Product Limited is given. Total 4 sentences they have given, my dear students. And what they are asking, you are required to advise the accountant of BSP Limited with valid reason the amount to be recognized as revenue in the above case in context of AS9. Also determine the total revenue to be recognized for the year ending 31st March 2023. Okay. My dear students, as per AS9, sale of goods, the revenue should be recognized when 3 conditions are satisfied. Condition number 1, when the ownership of the goods is transferred, or you can say risk and rewards associated with the goods are transferred onto the buyer. First condition. Second condition, amount must be measurable. And the third condition, my dear students, no uncertainty about collectibility should be there. No uncertainty. It means there should be reasonable surety about the collectibility. Fine. So these 3 conditions must be satisfied. Then only you can book the revenue from sale of goods. Check your first one. Goods 2 lakh sold to DEN Limited on 20th March, but at the request of buyer, this were delivered on 10th of April. See, this is financial year 22-23 and this is next financial year, my dear students. This is financial year 23-24. The revenue should be recognized in 22-23 itself because we are ready for the delivery, but it is delayed as per buyer's request. It means here risk and rewards are transferred onto the buyer when we are ready with the delivery, my dear students. So in financial year 22-23, entire 2 lakh will be treated as what? Income. Fine. Next one. On 15th Jan 23, goods 3 lakh were sent on consignment basis. In case of consignment, there are 3 parties: consignor, consignee, customer. When we can say there is income, when consignee sold goods to customer, at that time we can say, that is consignor can say, there is sale of goods and income we can record in the books of accounts. So here consignor sent goods to consignee 3 lakh rupees, of which 20% of the goods unsold are lying with the consignee. So 20% unsold, it means 80% goods sold to the customers. Hence 80% can be recorded as income. So in the second case, 3 lakhs into 80%, 2 lakh 40,000. Okay. Next one, third one. 4 lakh worth of goods were sold on approval basis, sale on approval basis. When we can record income? If the goods sent on approval basis, 2 conditions. Condition number 1, when the approval is received from that particular party. Fine. And point number 2, when the reasonable time is expired, my dear students. If I have given you 15 days time for the approval purpose, and if there is no response from your end till the reasonable time expired, that is 15 days. So at the end of reasonable time, I will assume that the goods are approved by you. Yes or no, my dear students? So 2 conditions. Number 1, you have to respond. So 15 days time, after 6 days, you informed me that sir, your goods are good. Fine. Goods sold to you then. Second, if reasonable time is expired, 15 days are over, then on 16th day, I will assume it as sale. Yes or no, my dear students? Please confirm here. 4 lakh sent on approval on 1st December 2022. 1st December 22, my dear students. Period of approval 3 months. Now confirm 1st December 22. So the 3 months will get over when? On 1st March 23. So December, Jan, Feb, end of Feb is as good as starting of March. 3 months over. And my year end is 31st March 23. My year end is 31st March 23. So my dear students, buyer sent approval for 75% up to 31st Jan. Up to 31st of Jan, he approved 75%. Very good. So 75% is my sales. Fine. No approval or disapproval received for the remaining till 31st of March. I am not concerned as well, because if you have not responded till 1st of March, which is the reasonable time, 1st of March, we will assume 25% is sold. Yes or no, my dear students? So 75% approval is received, hence that will be taken as what? Income. And 25%, since the reasonable time is expired on 1st of March, hence we will consider the remaining 25% as income during the current year only. So entire 4 lakh will be recorded as income. So here 2 lakh rupees, here 2 lakh 40, here 4 lakh. Last one, apart from the above, BS Product Limited sells goods to dealer also. Okay. One of the condition of the sale is that interest is payable 2% per month for the delay payment by the dealer. Okay. The percentage of the interest is only 10%, that is 50,000 on such overdue outstanding due to various reasons. So the amount of interest in amount they have given 50,000. During the year, the company want to recognize the entire interest receivable 60,000 rupees. Now try and understand. Now try and understand, my dear students. The total interest is 60,000, I can understand. You cannot record entire 60,000. Here the percentage of interest recovery, word is where interest recovery is only 50,000. Now there is one condition. One condition is what? There should be surety about the collectibility. In other words, no uncertainty about the collectibility should be there. So here total 60,000 and there is surety of 50,000. 50,000 is recovery. Hence this 50,000 will be recorded as income and not entire 60,000, because for remaining 10,000 there is no surety about the collectibility. Fine. Okay. So for everything reason is given, individual amount we have decided. Now simply we have to take the summation. 2 lakh plus 240, it's 4 lakh 40 plus 4 lakh, it's 8 lakh 40, 840 plus this 50,000, the circle figure, 8 lakh 40 plus 50,000, 890. Please confirm here, my dear students. Total answer is 8,90,000. Fine. One reason we will read quickly. Here first you have to write the provision, those three conditions which I have already discussed with you all. Ownership, risk and reward transfer, plus amount must be certain, and the last one, no uncertainty about collectibility should be there. Case 1, the sale is complete but delivery has been postponed at buyer's request. Correct. BS should recognize the entire sale for the year ending 31st March 23 only, because risk and rewards are transferred. Rewards are transferred when we are ready with the delivery. Second, 20% of the goods lying unsold with the consignee should be treated as closing stock of inventory. Sale should be recognized 80% only, which is 2 lakh 40. In case of consignment sale, revenue should not be recognized until goods are sold to third party, that we already know. Third one, in case of goods sold on approval basis, revenue should not be recognized until goods have been formally accepted or buyer has done any act of adopting the transaction, that is nothing but the call from other side, etc., or time period for rejection has elapsed. You can say reasonable time is expired, my dear students. Therefore, revenue should be recognized for entire 4 lakh rupees, because 75% approval received and 25% reasonable time is expired. Last case, as per the standard where the ability to assess ultimate collection with reasonable certainty is lacking at the time of raising claim, the revenue should be postponed to the extent of uncertainty. Very beautiful wording it is, my dear students. Everywhere you can use where the ability to assess ultimate collection with the reasonable surety is lacking, with the reasonable certainty is lacking, revenue recognition should be postponed till the surety. Yes, no, yes, my dear students. In the present case, there is surety of only 50,000 rupees and not 60,000 rupees. Hence, my dear students, interest income 50,000 should be recognized in the books. Take all the summation, it will be 8,90,000. Game is over. Yes, no, yes, my dear students. I hope this particular sum is clear in your mind. Now, next sum is based on AS 21, Consolidated Financial Statement. The similar sum is there in JKSC textbook as well as in institute module as well, my dear students. Zoom Limited acquired 70% of Star Limited at 30 per share. Following is the extract of balance sheet of Star Limited. Okay. If you see, your total 15 lakh equity shares are there, my dear students. Fine. So please confirm we bought 70%. So 15 lakh into 70%. It will be 10 lakh 50,000 equity we bought. Confirm once. 15 lakhs into 70%. It's 10 lakh 50,000 equity. Remaining are with some minority interest. Other information. Debentures and trade payable. Can I say they both are liability? Property, investment, current asset, loans and advances, they are asset, my dear students. On the same day, Star Limited declared dividend 20%. So logically speaking, this dividend is what, my dear students? Pre-acquisition dividend. Pre-acquisition dividend, and pre-acquisition dividend should be adjusted against cost, whatever you have paid. See, you have paid per share 30 rupees. So in that the dividend amount is included. So 30 rupees minus pre-acquisition dividend, you will come to know the actual amount spent for purchase of business 70%. And as agreed between both the companies, property, plant and equipment were to be depreciated 10%. Okay. So this should be depreciated by 10%, my dear students. So 1 crore 5 lakhs minus 10%, it is 94 lakh 50,000. Fine. Investment to be taken at market value 90 lakhs. So investment value is how much? 90 lakhs. Fine, sir. Calculate the goodwill or capital reserve to be recorded in consolidated financial statement. Simple sum it is. My dear students, question number 17. All of you. Calculation of net asset. The company in which we are acquiring something, we will calculate the net asset of it. Asset will be taken at revised amount. Tell me, property, plant and equipment, my dear students. The revised amount is 94 lakh 50,000. Then investment, revised amount is 90 lakhs. Current assets 1 crore 2 lakhs. Yes or no? Next one, loans and advances 33 lakhs. Loans and advances 33 lakhs. And we have two liabilities that will be subtracted, my dear students. Less 15% debentures and less trade payable. This is 15 lakhs and trade payable is 82 lakh 50,000. So find out, my dear students, worth of the company. Worth of the company is how much? 94 lakh 50,000 plus 90 lakhs plus 1 crore 2 lakh plus 33 lakh minus 15 lakh minus 82 lakh 50,000. It is 2 crore 22 lakhs, of which we acquired 70%, my dear students. So our share 2 crore 22 lakhs into 70%, it is 1 crore 55 lakh 40,000. So our share is 1 crore 55 lakh 40,000. We paid total, how many shares we acquired? 10 lakh 50,000, my dear students. 10 lakh 50,000 equity we bought and per share rupees 30 we paid. So 10 lakh 50,000 into 30, it is 31 lakh 50, or rather it is 3 crore 15 lakhs we paid. Fine. But this 3 crore 15 lakhs include payment for two things. One for pre-acquisition dividend as per accounting standard 13, you know, pre-acquisition dividend should be adjusted against what, my dear students? Cost. Here if you confirm, the rate is 20%, the face value is 10 into 20% per share dividend 2 rupees. Now that dividend belongs to somebody else because we bought shares today. From today onwards, whatever dividend we will get, that will be treated as revenue income. but we acquired and on the same date we got the dividend. That dividend belongs to somebody else. So to that fellow we have to compensate, my dear students. We bought 10,50,000 equity from that fellow, and for each share we will get 2 rupees dividend. So 10,50,000 into 2, my dear students, 21 lakh rupees we paid for the dividend, which will be adjusted against cost. So from this cost 21 lakh you have to subtract remaining amount. This is paid for 70% business share. 70% business share. So 3 crore 15 lakhs. So this is 2 crore 94 lakhs we paid for the business. So calculation of goodwill or capital reserve, my dear students, we paid 2 crore 94 lakhs for the business, less our share in net asset. Our share in net asset 1 crore 55 lakh 40,000. Please tell me, we paid some more amount, more by 1 crore 38 lakh 60,000. Can I say we paid more amount for the goodwill? 1 crore 38 lakh 60,000. Please confirm here, my dear students. Question number 17. Your goodwill 1 crore 38 lakh 60,000. 1 crore 38 lakh 60,000. Yes or no? Correct. Here they have ascertained C, net asset, R share. Fine. When they will compare, my dear students, see here, they have subtracted pre-acquisition dividend and 2,94,000 is paid for. This 2,94,000 is paid for business share. Yes. So this particular solution will enable you to understand your concept very well. Find out the net worth of that particular asset. Our share is 70%. We paid this much. We paid two amounts here, pre-acquisition dividend and for the business. Now for the business we paid some amount, we got less business, hence the extra amount is for goodwill. Fine. My dear students, I hope this sum is very simple. Now next sum of discussion is preparation of financial statement of companies. Question 18. It is full-fledged sum, my dear students. Now there is one problem which every student faces, that sir, company final account sum how to approach in the exam. Very simple. First prepare the framework, that is prepare the balance sheet, prepare your statement of profit and loss, then decide, my dear students, how many notes to accounts you will make. So this will consume approximately 7 to 8 minutes in the exam, and thereafter simply incorporate the trial balance, update the adjustment, game is over. So come on, along with me, you can practice, because directly if we will take this is the answer, this is the answer, that will not suffice. See, you know everything, but still we are not able to write in the exam. What is the reason behind that? The writing practice. See, small sums you can manage, the big sums, the writing practice will give you edge over others. Please check this sum. Aqua Limited has authorized capital 50 lakh divided into 5 lakh equity shares of 10 each. Their books show following ledger balances: inventory opening, discount, carriage, purchase, rates, furniture, business expense, wages, freehold land, plant, engineering tool, trade receivable, advertisement, commission. Here bank current account debit balance. Debit means what, my dear students? Money receivable. It is asset. Next is what, my dear students? Cash in hand. Calls in arrears. Sir, what we will do with the calls in arrears? Less in share capital note. Calls in arrears will be subtracted from the share capital. Equity share capital is given. 2 lakh shares are there. Trade payable, sales, rent, credit, it means income. Transfer fee received is income. Profit and loss credit, it means this is your opening balance of PL, my dear students. Repairs to building and bad debts. Fine. In the name of adjustment, what they have given, the inventory valued at cost or market price, whichever is lower, it is as per accounting standard number 2 on 31st March was 7,05,000. My dear students, this is your closing stock. Two effects of the closing stock: one in the changes in inventory, another in the balance sheet as inventory. Outstanding liability for wages and the business expenses they have given, so we will take care, it will be added in expenses. And second effect, other current liabilities. Children, depreciation, charge depreciation on written down values, plant and machinery, engineering tool, furniture and fixtures. Okay, so depreciation less from the asset, my dear students, and second effect is what? Profit and loss. We will record it as expense under particular head depreciation and amortization. Provide 25,000 as doubtful debt for the trade receivable. Children, entry for the provision PL2 provision for a doubtful debt. This provision for doubtful debt will be shown as uh, subtraction from the debtor, and profit and loss we will treat it as what? Expense. Next, provision or rather provide for income tax 30%. My dear students, that is possible when we get profit before tax at the end. It was decided to transfer 10,000 to reserve. This is appropriation. This is appropriation. Fine. You are required to prepare statement of profit and loss and balance sheet. Now see, profit and loss, you can prepare full profit and loss. It's very simple. But what about balance sheet? Don't prepare full balance sheet. Only write the relevant required items. See, mostly the repetitive items are share capital, reserves and surplus. Here there is no bank loan or debenture, so non-current liabilities are not there. Directly current liabilities will come. In that four heads are there, my dear students: short-term borrowing, trade payable, other, and last short-term provision. Then on asset side, tangible information they have given, and in current asset mainly three items would be there: inventory, receivable and cash equivalent. So first job is what? Prepare the format quickly in the exam. So all of you can practice along with me, my dear students. Question number 18. Question number 18, everyone. You can practice along with me, everyone. So first we will draft the balance sheet based on the content given in this particular question. In the books of Aqua Limited, balance sheet as at 31st March 2023. Particulars, note, current year, previous year. Roman number 1, you can write in full: equity and liabilities. In that first point, shareholders funds. So prepare the framework in exam first. Number A, share capital, we will prepare note. Number B, reserves and surplus, we will prepare note because there is profit and loss as well as reserves both. Now second note is for current liabilities. Number A, trade payable, because short term borrowing like bank overdraft etc. is not there. If you will write, put nil. B is what? Other current liabilities. If there is one item, directly you can write in balance sheet, else you can prepare the note, there is no issue. C part is what, my dear students? Short term provision. So there is short term provision in this sum, like provision for income tax will come. Directly you can write in bracket or you can prepare note, there is no issue. Fine. Roman number 2, assets. In that first point, non-current asset. In that, property, plant and equipment, my dear students. And in that, tangible will come. We will make note for that. Second, current asset, mostly three items would be there: inventories, trade receivable, cash and cash equivalent. Inventory directly we can write. Trade receivable we need note. Why? Because less provision for doubtful debt we have to write. 7, cash and cash equivalent, to write cash and bank balance. We will get total for this. This is my balance sheet format. Now, statement of profit and loss for the year ended 31st March 2023. Particulars, note, current year, previous year. So how quickly you can write, that is very important, my dear students. Number 1, revenue from operation. Directly you can write because there is only one figure, which is sales. Number 2, other income. You can continue the note number, my dear students, here 8. So you will get your Roman number 3, which is total revenue. Then number 4, expenses. In case of expenses, various bullet points are there, like cost of purchase. Okay, so there is only one item related to purchase. Then changes in inventory, changes in inventories. Here we will write opening minus closing. Then employee benefit expenses. Then children, depreciation and amortization will come. Then finally children, other expenses will come. For employee benefit, we will prepare note because there is some outstanding adjustment, and other expenses we need to prepare a note because so many expenses are there. So income minus expense, Roman number 5 you will get profit before tax, total income Roman 3 minus expense Roman 4. Then sixth one, my dear students, less provision for tax at the rate of 30% they have given. Finally, I will get, my dear students, profit after tax, which is 5 minus 6. Your format is ready? Yes, sir. Now, notes to accounts. There are only 3 columns are there: particulars, current year, previous year. And since 10 notes are there, my dear students, simply what you have to do, for 5 lines prepare the note. Like my first note is what? Share capital. Yes, sir. Leave 5 lines. Then number 2, reserves and surplus. Leave 5 lines. Fine. Then note number 3, my dear students, other current liabilities, 5 lines. Fourth one, short term provision, 5 lines. Then fifth one, tangible property, plant and equipment. Now you can observe here total 4 assets are there along with the depreciation. So leave 10 lines here, have proper sufficient space here. Then sixth note, my dear students, trade receivable, we will show debtor minus provision for doubtful debt. Seventh one, cash and cash equivalent. Eighth one, other income. Ninth one, depreciation and, or you can say depreciation, we have not written any note. For ninth one, it is employee benefit expense. The last note, other expenses. Yes, after preparing the format, your job is what, my dear students? Read the sum, incorporate, game is over. Ledger balances are there, only one effect. Keep in mind, my dear students, leave sufficient space for the adjustment. At the end, answer your adjustments, 2 effects, and your sum is ready. Come on, along with me. First item, carefully, it's opening stock. Opening inventory is 6,65,000. So in your statement of profit and loss, changes in inventory, we always show opening minus closing. Yes or no? So my opening stock is 6,65,000. 6,65,000. From this, I'll subtract whenever I'll come to know the closing stock. Next item, discount and rebate, my dear students, 30,000. It's other expense. So other expense, discount and rebate. Amount is how much, my dear students? 30,000. So in current year column, 30,000. Next one, carriage inward, 57,500. Other expense, carriage inward, 57,500. Okay, as per the suggested answer, 57,500 we have written here. Fine. Next is what, my dear students? Purchase is 12,32,500. So purchase is directly you can write in SPL, cost of purchase. It's 12,32,500. 12 32,500. Next one, rates and taxes and insurance, 55,000. Other expenses, rates, taxes, insurance. Amount is how much, my dear students? 55,000. Next one, furniture and fixtures, 1,50,000. So your tangible asset, furniture and fixtures, the amount given inner column 1,50,000. From this we will subtract depreciation whenever we will come to know. Next one, business expenses will go where, my dear students? Other expenses, business expenses. But you know, here there is outstanding adjustment. So in the bracket we will write right now 56,000. Whenever we will come to know, see, always read the sum and proceed, don't jump from here to there. Okay, so right now 56,000 we have recorded. Whenever we will come to know outstanding expenses, that will be added separately. Next one, wages. Wages given to whom? The workers. Employee benefit expense. So employee benefit expense, we have note number 9, wages. In the bracket we will show, my dear students, because here again outstanding adjustment is there, 14,79,000. 14,79,000. Next one, freehold land, 7,30,000. Tangible freehold land, since this is land, there is no depreciation, my dear students. 7,30,000, outer column directly. Next one, plant and machinery, 7,50,000. So plant and machinery, inner column 7,50,000. We will leave one line for depreciation adjustment later on. Engineering tool, 1,50,000. Engineering tools, 1,50,000. We will leave one line for depreciation later on. Trade receivable, 4,500,000. Children, trade receivable, 4,500,000. We will leave one line for provision for depreciation adjustment. Advertisement expense and commission and brokerage will go where, my dear students? Other expenses. Advertisement expenses, brokerage. Advertisement expense amount 15,000 and brokerage amount is how much? 67,500. Done. Okay, see, this is how quickly you can record, my dear students, everything. Bank current account, 20,000. So cash and cash equivalent. Bank current account, it's debit balance, money receivable, my dear students, amount is 20,000. Next one, cash in hand, 11,000. In the same note, cash in hand, 11,000. I am just showing you that how we should write any long answer in quick way. Prepare the format, simply incorporate, write your adjustments, and then done. Fine. So while studying, don't only put a tick over the figure. Yeah, I know this figure, I know this figure. It would be very difficult in the exam to write the solution then if you will just do the audit every time. Fine, you have to solve your sum, and that efforts I am taking right now, so that at least you can see sir is solving, hence even we should solve. Getting my point? Come on. Next one, my dear students, calls in areas, where you will record share capital. Always we first write what? Authorized capital. Now in your question, very first line they have given authorized information. It's 50 lakhs. It is 5 lakh equity of 10 each. So we will write 5 lakh equity shares of rupees 10 each. This is 50 lakhs. Double underline. Then we write, children, issued, subscribed, called up and paid up. Called up and paid up. So here if you see share capital, they have given 2 lakh shares of 10 each. So here I'll write 2 lakh equity shares of rupees 10 each. I will not add word fully paid up because there are some calls in arrears. This amount is 20 lakhs, my dear students, and from this I will show less calls in arrears. given in the question 10,000. Fine. So this is 19 lakh 90,000, my answer it is. Done, sir. Next one, trade payable 2,40,500 directly in the balance sheet. Trade payable 2,40,500. So if there is direct amount given, directly write. Next is sales 36 lakh 17,000. 36 lakh 17,000 revenue from operation. Next one, rent 30,000, other income. So my dear students, other income, rent, amount is how much? 30,000. Credit they have written, it means it is income. If there is only rent, you can assume it is debit balance as well, my dear students, expense. But here they have written credit. Credit means what? Income. Transfer fee received 6,500, same. Transfer fee received. Next one, profit and loss, opening balance they have given. So in reserves and surplus, my dear students, profit and loss account, underline, opening 67,000, profit and loss, underline, opening 67,000. Here we will add when we will come to know profit after tax, and from this we need to subtract, my dear students, some reserves appropriation. Fine. And separately we will record that reserve in the notes. Next is what? Repair to building 56,500, other expense. Repair to building 56,500. Bad dates 25,500. Now children, if there is bad dates, so directly you can record here, or else you can prepare provision for doubtful debt account. Fine. But there is no opening provision given in the question. Opening provision for doubtful debt they have not given. So this bad dates will be recorded here, and closing provision will be charged to PL only. So here bad dates, other expense, amount is how much? 25,500. Fine. So one effect of the ledger balances are over. Now with the different color pen, I will show you the treatment of adjustment. Check. Closing inventory 7,05,000. My dear students, closing stock will be subtracted in changes in inventory. See, closing we will subtract 7,05,000. So here we will write 7,05,000. So tell me 6,65,000 minus 7,05,000. It is negative 40,000. Show it in negative. Fine. Second effect of this, balance sheet asset side, we will record it as what? Inventory. So where is my balance sheet, my dear students? This is my balance sheet. Inventory 7,05,000. Yes. Next one, outstanding liabilities, wages 25,000. So employee benefit expenses, wages 70, or rather it's 25,000. So we added here 14,79,000 plus 25,000. It is 15,04,000. And one more outstanding is there, my dear students. Business expenses 36,500. So 36,500 business expense plus 56,000. It is 92,500. Where you will give second effect of this outstanding expenses, other current liabilities, my dear students. So for other current liabilities, we have this note number 3, outstanding wages and outstanding business expenses. Tell me, outstanding wages 25,000 and outstanding business expenses 36,500. So we will get total here, my dear students, 25,000 plus 36,500. It is 61,500. Done. Next one, depreciation. On WDV only we have to charge. Plant and machinery 5%, my dear students. So here, tangible, check. First rate is with respect to plant and machinery 5%. So plant and machinery less depreciation 5%. So 7,50,000 into 5%. it is 37,500. It is 7,12,500. Fine. Next one, my dear students, engineering tool 20%. So less depreciation 20%. 1,50,000 into 20%. It's 30,000. It is 1,20,000, my dear students. And lastly, furniture and fixtures 10% less depreciation 10%. It's 15,000. This is 1,35,000. So the total over here, my dear students, 135,000 plus 7,12,500 plus 7,30,000 plus 1,20,000. It is 16,97,500. I hope you all are understanding everything. Fine. Depreciation. The second effect in profit and loss, the total of depreciation 15,000 plus 37,500 plus 30,000. It is 82,500. So in profit and loss, depreciation and amortization 82,500. Simple. Next one, my dear students, provide 25,000 doubtful debt. Entry is what? PL to PDD. So profit and loss, it will be recorded as expense in other expenses. This is provision for doubtful debt. Amount is 25,000. And the second effect, it will be subtracted from the debtor. So less provision for doubtful debt 25,000. So 4,500,000 minus 25,000, 375,500. Now last two adjustments are there, which is tax at the end when we will close everything. Then only we can give effect. And the second one is what? Appropriation. So now the closing process, my dear students. Everyone, check your first note is 19,90,000. Second, we cannot close right now reserves and surplus because adjustment of profit after tax and the reserves pending. Next is 61,500. Short term provision we cannot close right now because income tax provision is pending. Tangible is 16,97,500. Trade receivable amount is 375,500. 3,75,500. Cash and cash equivalent, my dear students, it's 31,000. This is 36,500. Employee benefit is 15,04,000. Fine. Now finally we will take total of this. It's 30,000 plus 57,500 plus 55,000 plus 92,500 plus 15,000 plus 67,500 plus 56,500 plus 25,500 plus 25,000. It is 424,500. 424,500. Okay. Now first we will close our profit and loss. So revenue from operation we have written. Now next point is what? Other income. Check your note number 8. It is 36,500. The total is 36,53,500. Here employee benefit expenses 15,04,000 and other expenses 4,24,500. Total 32,03,500. Income minus expense when you will do, it will be 4,50,000, my dear students. Of that 30% is 1,35,000. So the remaining amount is how much? 3,15,000. Now this provision for tax, the second effect will go where, my dear students? Short term provision. This is provision for tax 1,35,000. So the total is 135. And the remaining PAT is how much? 3,15,000. So will be added in reserves and surplus. And the question clearly says that 10,000 will be transferred to reserve. So from this 10,000 will be transferred to reserve, and that reserve will be recorded separately, my dear students. Now 67,000 plus 3,15,000 minus 10,000, it is 3,72,000. So the summation is 3,82,000. Okay, now update your all the notes in your balance sheet. Share capital is how much? 19,90,000. Reserves and surplus 382,000. Other current liabilities, please check 61,500. Short term provision 135,000. The total is 28,09,000. Property, plant and equipment, please check 16,97,500. Trade receivable is 375,500. Cash and cash equivalent is 31,000. This 28,09,000. The balance sheet tallied. The main objective of solving this sum is very simple. Sir, such a big question, how to tackle in the exam? So first read the question, based on that understand the framework of balance sheet and PL. PL you can prepare full PL like this, but in balance sheet write only the required item. Then prepare notes to accounts, keep 5-line space in between the notes. Then start solving the sum. First update the trial balance, that is the ledger balances, and at the end answer your adjustment. Close your notes. First close your statement of profit and loss. In that two effects you have to keep in mind provision for tax and the retained earning, that is profit after tax. Then close your balance sheet, it will tally. So I hope my dear students, with this particular question I have already informed that how to solve big question in limited time with full efficiency. Yes or no, my dear students? I hope. Hence, question number 18, which is based on company final account, is clear. Now, next topic of discussion is buyback of securities, my dear students, which is question number 19. Simple sum it is. Check. Mukti Limited non-listed company provide following information on 31st March 2023. Simply in JKSC, we have learned two equations here. Please check what data they have given. Land and building, plant and machinery, investment, receivable, inventories, cash and cash equivalent. Share capital we are interested 1 lakh equity shares are there. Share premium, general reserve, PL, which is surplus, 10% debentures, unsecured loan and trade payable. Now on 21st of April, the company announced buyback of 15,000 of its equity shares, 15 per share. In 15, 10 rupees is the face value and 5 rupees is the premium. Fine. For this purpose, it sold all investment for 2,50,000. Children, if you see here, investment, non-current investment is 2 lakh and they sold it for 2,50,000. So 50,000 is the profit which will be transferred to profit and loss. Simple. On 25th April, the company achieved the target of buyback. My dear students, so all the buyback entry will come on 25th of April. On 21st of April, investment sold entry will come. 21st April investment sold, 25th April buyback entries will come. On 1st May, my dear students, the company issued one fully paid up share of 10 each by way of bonus for every 8 equity share held by the equity shareholder. On 1st May, bonus issue will come. You are required to pass necessary journal entries for the above transactions. Now simply we will prepare one working, my dear students, which will enable you to write entries quickly. Question number 19. My working note number 1 is for buyback. Now here number of shares they have directly given 15,000. So no need to calculate the number of shares by following those three conditions. You remember section 68. My dear students, in case of buyback, now two equations I am writing. All of you please pay your attention. This is face value of shares bought back. If there is decrease in share capital, then immediately we need to increase by proceeds of fresh issue of shares, and if there is no fresh issue, then we need to create capital redemption reserve. Okay, and the second equation is, my dear students, premium on buyback. This premium on buyback is nothing but expense for the company, my dear students. And this premium on buyback first will be written off against securities premium, because section 52 allows. If there is deficit, if the less securities premium you find, then you can use then divisible profit, and divisible profit is nothing but like general reserve and profit and loss. Fine. Now this equation you have to fill in L shape. Always, all sums you can manage if you will follow this particular instruction, L shape. Now try and understand. Total shares for the buyback 15,000 shares. So what I am writing, 15,000 equity into 10 rupees is the face value, which is 1,50,000. On same 15,000 equity into 5, which is 75,000. Now this 75,000 is the expense. To write off, first we will use securities premium. If you see, my dear students, here securities premium amount is 3 lakhs. Fine. So please confirm 3 lakh securities premium we have. I would like to use only 75,000, use it. No issues. No need to use any divisible profit here. There is no information of the fresh issue. Hence, entire 1,50,000 will be transferred to CRR, and we need to create CRR. CRR will be created out of divisible profit, my dear students. Either you can use general reserve or the profit and loss. In my question, if you see general reserve 2,50,000 I have, and I want to create 1,50,000 CRR. So out of general reserve you can transfer 1,50,000, or you have even PL 1,50,000. So entire 1,50,000 will be transferred from PL. There is no issue. But I would advise first use general reserve. If there is deficit, then use profit and loss. Fine. So this equation always fill in L shape. First always write face value of bought back. Second the premium. Then third write off against securities premium. If there is deficit, use divisible profit. Then please check for any fresh issue, and lastly create what, my dear students, CRR. Fine. You can manage all the journal entries based on this particular equation, my dear students. And one more working we will prepare for the bonus. Working note number 2. Bonus issue. Here it is, bonus and held. One bonus for 8 held, it is clearly mentioned. If you confirm in your question, 1 lakh equity shares are there, out of that 15,000 equity bought back. So the remaining held 85,000 equity. So by doing cross multiplication, bonus is how much? So 85,000 divided by 8. 10,625 equity will be issued as bonus. Now bonus is for free of cost, hence it will be multiplied with the face value only. Face value is 10. It is 1,06,250 total bonus. And for the bonus, my dear students, we will use reserves. And please try and understand, always first use capital redemption reserve. If there is deficit, then use capital reserve. Thereafter securities premium. Make sure that your capital reserve and securities premium earned in cash. It should be earned in cash. And last one is what? If there is still deficit, then use divisible profit. Divisible profit means what, my dear students? General reserve, profit and loss, etc. Fine. Now confirm. After buyback, I am having CRR of 1,50,000. Can I say that 1,50,000, out of that 1,50,000, I can issue fully paid up bonus share of 1,06,250. So I will use capital redemption reserve 1,06,250. No need to use capital reserve, securities premium and divisible profit. Fine. Now based on this working note, now we can write all the journal entries, my dear students. Please confirm here. Check. Question number 19. Now first entry on 21st of April 2023, that is investment sold. Fine. So investment 2 lakh rupees sold for 2 lakh 50. So bank account debit 2 lakh 50. Investment goes out with the book value, and there is profit. This profit will be transferred to profit and loss account. Fine. Done. Now on 25th April, buyback target achieved. Now how to write journal entry based on this? Always before you reduce your capital, first increase your capital base. Either fresh issue or CRR. Here only CRR is there, and we are creating out of general reserve or PL. Whatever you would like to use. In the exam, if you want to go for only one reserve, go for general reserve. If there is deficit, use PL. In the absence of information. Now tell me, CRR, I want to create. So CRR will be credited, out of which reserve? GR. So GR will be debited. Please check my entry, my dear students. General reserve to capital redemption reserve 1,50,000. You can use general reserve or PL. Fine. Thereafter, my dear students, after increasing the capital base, now amount due. So when you will due the amount, equity share capital cancelled 1,50,000. Premium on buyback is an expense, debit 75,000, and the whole amount is payable to whom? Shareholders. So equity share buyback word we will use. Here please check your second entry, my dear students. Equity share capital cancelled. Directly see premium they have adjusted against the securities premium, or else what you can write, instead of securities premium you can write premium on buyback account debit, and one more entry you have to pass, which is securities premium account debit to premium on buyback. Here they have directly adjusted to equity share buyback. Next, third entry children, equity share buyback to bank. Fine. So here please confirm amount due, then amount paid, then premium they have already adjusted against securities premium, and hence my buyback entries are over. Now finally on 1st May there is bonus, and for the bonus we are using which reserve, my dear students? CRR. So capital redemption reserve account debit to bonus to equity shareholder, and in the next entry, my dear students, that bonus will be transferred to equity share capital. Game is over. This working they have prepared like this. I have shown bonus working like this. Fine. So this is question number 19, working note 1 for the buyback and working note 2 for the bonus issue. I hope language is clear. With this, my dear students, your question 19 is over. Now the last question of the RTP, which is based on accounting for reconstruction of company, internal reconstruction, which is question number 20 now. My dear students, please, what they are asking, as a part of reconstruction scheme for Getting Better Limited, very good, Getting Better. Now good days will come. The following terms were agreed upon. Total 3 adjustments are there. Show necessary journal entry in the books of Getting Better Company based on the above scheme. Okay, we are ready. Check your first point. The shareholder to receive in lieu of the present holding 10,000 shares of 50 each. So we will cancel equity share capital. In the bracket we always write the face value, that is 50. 10,000 into 50, my dear students, it is 5 lakhs. Fine. So we cancelled the old equity, against which what we will get? 15,000 fully paid equity shares of 10 each. So to equity share capital face value 10, 15,000 into 10 is 1,50,000. Done. 12% fully paid preference shares. So to 12% preference share capital to the extent of 2/5 of the total equity share capital. So my original share capital was 5 lakh. 5 lakh into 2/5, it is 2 lakhs. Fine. If they mention here 2/5 of the above new equity share capital, then it will be 1,50,000 into 2/5. Please take care of this particular term. Okay. And see, they are asking what to pay them 50,000. Okay, to pay them. So we have to pay 50,000, my dear students. Yes. Fine. And transfer the remaining to reconstruction account. See, normally in institute module they have written capital reduction account. So you can use capital reduction account, but since the specific wording is given, use this account in the solution, reconstruction account. So here we will write to reconstruction account is my balancing figure. So for 5 lakh rupees, they got some equity of 1,50,000, the preference of 2 lakh and 50,000 in cash. So 1 lakh is the sacrifice which will be transferred to reconstruction account. Yes or no, children? Check your first entry here. Share capital debit 5 lakh, to share capital 150, to 12% preference 2 lakhs, bank 150, and this is your balancing figure. Anybody? For the narration, that is simple. For the narration being, try to write the same sentence which is given in the question. In lieu, we received this. Fine. Second, 8% preference share capital 3 lakhs. To write down the value of preference share to 50, original face value 100. So 8% preference share capital, the original value is 100. We will cancel 3 lakh rupees. Against which again we will issue 8% preference share capital, but with the new face value 50. Now try and understand, my dear students. 3 lakh total amount, 1 share of 100. So 3,000 preference shares are there. Now we will issue exact number but with the new value 50. So 3,000 into 50 comes to 1,50,000. Yes or no? So the difference is 1,50,000, which will be transferred to reconstruction account, which is nothing but the sacrifice. So for 3 lakh rupees, they got new share of 150, remaining 150 is the sacrifice which will be transferred to reconstruction. Check here, preference debit to preference to reconstruction is the balancing figure. Done. Children, last one, 14% debentures of the nominal value 2 lakh along with accrued interest 56,000 was waived off for 3/4 of the total amount and the remaining being paid in cash. So 14% debentures getting cancelled, 2 lakh. accrued interest on debenture is 56,000, its liability cancelled. Something will be transferred to reconstruction account. How much? 3/4. So 2,56,000 is the total due, 3/4 waived. So 2,56,000 into 3 divided by 4, it's 192,000 sacrifice. The balancing figure we have to pay in cash. So you can write cash bank, 2,56,000 minus 192 is the sacrifice, 64,000 we have to pay in cash or bank. Please check here, my dear students, 14% debit, interest on debenture debit, to bank we paid 64,000 and 3/4 is a sacrifice, 192,000. Fine. Now, my dear students, final hidden adjustment it is, if you confirm in my entry number 1, reconstruction balance is 1 lakh. In my entry to 1,50,000, so total 2,50,000 plus reconstruction balance 192,000, 250 plus 192,000, so total reconstruction balance 4,42,000, and you know at the end any balance in capital reduction account or the reconstruction account will be transferred to capital reserve. So 4,42,000 transferred to capital reserve. Yes, no, yes, my dear students, correct. So with this, my dear students, can we conclude all the 20 questions we understood, and in detail how to solve company final account based sum that we saw, and all the in and outs of all 20 questions we saw, working notes we did. Now, my dear students, with this, can we confirm the discussion of RTP May 2024 is over. All the very best for your exam, my dear students. All the very best. Bye bye. Thank you so very much.